Before giving you a quick preview of this morning's program, I wish to highlight a couple of points. First of all, the MFSA takes security very seriously, and this webinar is being conducted using Microsoft Teams, which follows all the security best practices. Secondly, please note that, like other webinars organized by the MFSA, this webinar is being recorded and will be available for viewing through the MFSA's web portal. Now on to this morning's program. We will be starting off with an opening statement from our Chief Supervision, Christopher Buttigieg, followed by presentations by the head of the NCC and other senior officials from both the FIAU as well as the MFSA. We will be stopping for 10 minutes or so at around 11:30. The second half of this webinar will consist of interventions by the Registrar of the Malta Business Registry and other members of the Registry's senior management team. Our Head Conduct Supervision will then round off today's proceedings. It is important to point out that we will be having 2 slots dedicated to addressing questions you may have. The first slot will be right after the coffee break, and the second slot at the end of the presentations. The webinar kicks off in a couple of minutes' time. Therefore, I encourage you to use the chat facility to type any questions you may have for the speakers who will be delivering their presentations in the first half of the morning so that they can be tackled after the coffee break. With that, I ask Christopher Buttigieg, our Chief Officer Supervision, to make his opening statement. Thank you.
Thank you for participating in our webinar. It is a pleasure to introduce this webinar, which has been planned over the last months. CSPs and trustees are very important within our regulatory framework and our ecosystem. They are, CSPs in particular, are a first line of defense. They are gatekeepers with respect to anti-money laundering. And therefore, we felt that as one of the programs for this year, we should focus on this area. In 2019, we published our vision. It outlined a journey whereby the MFSA would be raising standards across the board with respect to regulation, supervision, and also practical implementation by the industry. Since then, we've reviewed our organizational structure, introduced a number of new functions, a risk management function, a due diligence function, a function for financial crime compliance, a new directorate on enforcement, a cybercrime function, and we have therefore strengthened our organizational structure to be able to do more with respect to supervision and also enforcement. We've also increased resources from 300 when we started in 2018 to 450 by the end of this year. So an additional 150 staff, and we've also strengthened our training facility. Training is important, as I've mentioned on a number of occasions in other events and in other venues. Financial supervisors don't grow on trees. They require proper training. They need to understand the mechanisms, the tools for financial supervision, and we need, therefore, proper training in skills that are adequate for financial supervision. And therefore, we have also established a Financial Supervisors Academy, which focuses on supervision for supervisors. So training by supervisors for supervisors. We've also doubled our on-site inspections. So in 2018, we managed to carry out 168 inspections. By the end of this year, we would have carried out hopefully 350. At least that's the plan, and at the moment we are on schedule. We've also strengthened our enforcement action. And if you have the time to visit our website and go through the administrative measures and penalties that have been imposed this year, you'll notice that also in this area we have doubled our effort. All this with the aim of raising standards within the jurisdiction. All this with the ultimate vision of making sure that Malta becomes even more attractive for serious players in the field of financial services. And whilst we acknowledge the reports Moneyval, by IMF, by OECD, and the recommendations, and we're working hard to implement those recommendations. Ultimately, what we're doing today, it has a bigger purpose, and that bigger purpose is that of, as I've already mentioned, putting Malta on the map even more in the future as a jurisdiction of choice for serious players in the field of financial services. CSPs are important, as I mentioned in my introduction, in this vision. We're raising the bar with respect to CSPs. We've issued a consultation and the feedback statement, and there is a bill which is currently being considered by government, and which will hopefully reach Parliament once Parliament reconvenes in October. And the purpose of this bill is to regulate in more detail and with higher standards the CSP industry. We're all together in this. Everyone will benefit from a jurisdiction that has higher standards, and therefore together we want to work with you in order to be able to reach our objective. I invite you to participate in this seminar, to ask questions. Where possible, we will answer your questions, and I hope it will be fruitful for all the participants, and that you will find it useful also in better implementing the anti-money laundering framework in Malta. I would like to thank my colleagues from the Communications Department, and also my colleagues from the Trust and CSPs Department that have worked hard to organize this seminar. And I'd like now to invite my colleague from NCC, Helga Buttigieg Dabono, who is the executive head at the NCC, to deliver her presentation on legal arrangements and legal entities and the related risks. Thank you very much.
Thank you, Dr. Buttigieg. Good morning, ladies and gentlemen. I would like to thank, first of all, MFSA for the opportunity to address you today in what I believe is a very worthwhile event to provide outreach to the private sector. I will start by giving a background on the NCC, and then I will move on to a discussion on the sector-based legal arrangements and legal relations risk assessment. For all those who still have not heard about the NCC, the National Coordinating Committee on Combating Money Laundering and Funding of Terrorism, this was established way back within the Ministry for Finance and Financial Services through subsidiary legislation 373.02. Basically, the notion of having this entity was identified through the updated National Risk Assessment, which was ordered by the government, and which highlighted that there was the need for better coordination within the competent authorities. The NCC is today the governing body responsible for the general oversight and coordination of Malta's anti-money laundering and the combating of funding of terrorism strategy and policy. And therefore, it is in charge of defining, overseeing, and coordinating the implementation of this strategy. The objectives of the NCC are basically to ensure transparency within Malta on AML and CFT risks, to establish a comprehensive, coordinated, and communicated strategy to manage these risks, to have effective execution of and follow through on the decisions made within the board, to ensure that there is effective ongoing cooperation and intelligence sharing among stakeholders, and also lastly to review, analyze and monitor the MLTF threats in Malta, as well as, of course, to implement action plans against agreed timelines. Lastly, I am sure that all of you have heard about the Moneyval Mutual Evaluation Report, which was published way back in July 2019. This report basically provides a summary of the AML and CFT measures which were in place in Malta as at the date on the on-site visit, which happened in November 2018. Since the publishing of the MER, which is Mutual Evaluation Report for short, the NCC has incorporated the 58 recommendations that were in this final report into an action plan, which was circulated to all the competent authorities so that they would report their plans and give timeframes as to when the deficiencies would be effectively addressed. The NCC has now been fully established for over 2 years. The NCC board meets regularly to decide on and draw up policies. As you can see from the slide over here, the members of the board include very high officials. There is the Permanent Secretary, Ministry for Finance and Financial Services as chairperson, and we have other high officials such as the chairperson of the Asset Recovery Bureau, the governor of the Central Bank, also the chairpersons of the FIU and Mfsa, and also others. Basically, the National Risk Assessment and the Strategy Action Plan highlighted 7 pillars which needed to be addressing. We have not stopped there. We have also created subcommittees which are made also from organizations which are not board members, including the Sanction Monitoring Board, the Malta Registry, also the Commissioner for Voluntary Organizations. These were created under the auspices of the NCC to ensure that these actions will be carried out by the end of 2020. These subcommittees, basically, we meet together. They involve legal and technical officials from the various competent authorities, including also MFSA, FIU, the Malta Police Force, also the AG, and we have also the Malta Security Service working with us. Also, these subcommittees are there to address specific areas through various work block meetings that we continually engage with. I will mention also the IO's immediate outcome. One of the MER, basically there was recommendation for this, basically stated that Malta should, as a matter of priority, take action to improve national understanding of risks, of threats and vulnerabilities by conducting a detailed analysis of the risks arising from the use of legal persons and their arrangements. In fact, also, way back when I started with my appointment, we did the Article 5 of Subsidiary Legislation 373.02, which basically ascertains that the NCC is responsible for ascertaining that there is effective implementation of the national strategy and policies and the actions intended to address these threats, these vulnerabilities, and these risks, by identifying and carrying out national risk assessments and to keep that risk assessment up to date, of course. So basically, the NCC today leads the exercise for the updating of the NRA and also the sector-based risk assessments. You may appreciate that risk assessments are very, very dynamic, so we need to continually engage with the competent authorities to actually get fresh statistics, current data, so as to be able to keep these risk assessments up to date. These risk assessments not only serve to strengthen the authorities' knowledge in the risks and vulnerabilities and help them mitigate the threats, but they also help them provide guidance and proper outreach to the private sector, such as today, what we're doing in this webinar today. During the 2019, the 3 sector-based risk assessments were completed, which are an extension to the existing updated national risk assessment. We felt that there were areas within the national risk assessment which had not been addressed properly, so we roped in all the competent authorities to give their input and to provide data and statistics to formulate 3 other documents. And these were related to basically the risks on funding of terrorism, virtual assets, and what I am going to target today is the legal entities and legal arrangements and voluntary organizations. Basically, the national risk assessments are now being coordinated today by the NCC, as I have already stated, but it is a national effort. The NCC leads the exercise, but it should be highlighted that these documents demand the data and the expertise from the relevant competent authorities and also from the private sector. We engage with the competent authorities to provide us with the data, with the statistics, so that we can formulate a document which gauges the risks and the vulnerabilities. These risk assessments not only serve to strengthen the authorities' knowledge in the risks and vulnerabilities and help them mitigate the threats, but they also help them provide guidance and proper outreach to the private sector, so that this sector is also aware of the risk exposure and help it take effective measures to assuage the identified risks. Today, as I have said, I will basically concentrate on the legal arrangements, risk assessment. Basically, this was coordinated by us, but as you can see from the slide, there was various input from the following stakeholders. As you can see, MFSA, MBR, the FIAU, of course, but also the Office of the Commissioner for Voluntary Organizations, the Office of the Registrar for Legal Persons, and also the CFR as well. The purposes of this risk assessment was basically to evaluate Malta's Aml Cft risk exposure through the lens, of course, of the legal entities and arrangements, to improve the understanding of the nature of these risks, and to identify measures that would strengthen the AML CFT regime to mitigate also these risks. This was basically a four-step process. As you can see from the slide, threat assessment, this focuses exclusively on Malta's threats. Vulnerability assessment assesses the inherent vulnerability of each class of legal entity and arrangement against a variety of vulnerability criteria. There is the controls assessment as well. This assesses the strength of controls in place to address the risk of each class of legal entity and arrangement, and also the residual risk calculation. This combines the assessment of the vulnerability and controls for each class of legal entity and arrangement to produce an overall assessment of residual risk for each class. The findings of the risk assessment indicates that certain classes of legal arrangements and entities are highly exposed to illicit proceeds of crime from tax evasion, activities of local criminal groups, and also drug trafficking. However, I must also emphasize that such findings do not take into account the controls that are in place or their effectiveness. For threats such, for example, as fraud and misappropriation, corruption, and bribery, and unlicensed financial services, legal entities, and arrangements may be misused to enable these predicate offences. I will now give an outline of the threats, the inherent risks, and the controls found in that order, basically. The key findings in the risk assessment indicate that certain classes of legal entities and arrangements are highly exposed to illicit proceeds of crime from tax evasion, activities of local criminal groups, and also drug trafficking. As I said before, the controls in place. Drug trafficking has been assessed as medium-high risk. The proceeds from this predicate offense have traditionally been, of course, cash-based, which combined with the high number of cash transactions in Malta compound the threat from drug trafficking. As regards fraud and misappropriation, these are economic crimes. They are strongly linked to legal entities and arrangements. These proceeds from fraudulent activities may flow through the financial system via use of legal structures. As regards corruption and bribery, these are relevant threats to legal entities and arrangements in Malta. Private companies, trusts, foundations are typically linked to this predicate offence. Bribes can be provided either in monetary form or in kind, for example, through the provision of services to the individual. For payment of cash or a direct transfer of assets, these are frequently executed through legal entities and arrangements beneficially owned by the recipient. For bribes paid in kind, they may be delivered in the form of, for example, real estate development or similar services. As regards the threats of funds from the provision of unlicensed financial services products being placed through legal entities and legal arrangements, although low, should also be considered since financial services products are typically provided through some form of corporate structures as well. As regards internationally terrorist financing, this is also a threat with strong links globally to legal entities and arrangements, particularly voluntary organizations. Voluntary organizations worldwide carry out legitimate charitable work in high-risk jurisdictions and also, unfortunately, conflict zones. As a result, these activities conducted by the VOs in these areas, including the movement of funds, are typically viewed with less suspicion than if executed through other structures. This also typically leaves VOs globally vulnerable to this kind of exploitation. As regards public private limited companies, these were assessed as having a high inherent risk prior to, of course, considering the controls in place, as I am basically emphasizing, mainly attributable to the large number of entities of this type, their complex beneficial ownership structures, the proliferation of private limited companies in higher risk sectors, and the concentration of ownership by high risk foreign individuals. The operation of private limited companies across a wide range of sectors is also a significant driver of this inherent vulnerability. Proliferation in cash-intensive sectors, such as, for example, hospitality and manual services, also in retail, also contribute to the overall level of vulnerability which was exposed, while the prevalence of cross-border activity and foreign ownership poses challenges for ongoing monitoring. Public limited companies in Malta, it was found that locally the Aml Cft vulnerability of these structures is particularly low due to the relative scarcity of companies of this type registered in Malta. Of course, furthermore, several Maltese public limited companies are listed, thereby increasing transparency. And of course, it reduces the attractiveness to use these to commit ML or FT offences. Also, since public limited companies tend to have fragmented shareholdings, the risk of them being controlled by a high-risk foreign national or other high-risk individual was not considered to be significant. Going on to partnerships, with regards to these in Malta, the sectors in which partnership operate are considered a key area of vulnerabilities. Partnerships are a popular form for many firms, acting as gatekeepers, company service providers, such as advisors, advocates, accountants, the CSPs. These sectors fall under the broad class of the DNFPPs. The vulnerability of partnerships is therefore driven in part by their underlying exposure to high-risk sectors. In addition to sectoral exposure, such services are often provided to or on behalf of foreign individuals, in many cases also non-EU citizens, who are looking for assistance with their activities in Malta. Foundations. We have in Malta foundations, excluding those purpose foundations which are categorized as voluntary organizations. They are vulnerable to misuse as well for a number of reasons. There is the possibility that such foundations are owned by high-risk individuals. Secondly, they may be used as investment vehicles and asset holding structures. And finally, they have strong privacy features as well. Foreign organizations are also permitted to operate in Malta, and while still limited, this adds to the already fragmented atmosphere that we have over here. Finally, both the ability to form separated cells to partition assets and the option to use foundation as a holding structure for other companies further increases the vulnerability of this entity type. Going on now to branches of foreign entities in Malta. Branches of foreign entities are vulnerable to ML and FT transactions as a result of their activities in higher risk sectors, their international cooperations, and also the foreign beneficial ownership. Local branches are estimated to operate primarily in the financial services sector, which poses a particular high risk. While the majority of branches operating in Malta are of EU registered entities, the entities themselves may also operate outside the EU in high-risk jurisdiction and may pass, of course, this risk on to local branches. Other legal entities in Malta, other legal entities which comprise a registered association were assessed to have a relatively low vulnerability due to their limited number. The majority of the registered associations are also thought to operate exclusively domestically. In terms of beneficial ownership and management, registered associations are run for the benefit of their members, where a significant number of these members are thought to be residents, with any foreign beneficial ownership being in a very minority share. The management of these entities is conducted by administrators, the majority of whom are also domestic operators. Moving on to trusts. In Malta, trusts are particularly exposed to being misused. Trusts experience an element of privacy and confidentiality and are prevalent in Malta. And also trusts are estimated to hold a large number of assets as well. Other legal arrangements in Malta, mainly comprise sole traders and registered associations. Their stems from their activities in higher risk areas of the economy and their strong links with the predicate offense of tax evasion. In addition, vulnerability is driven by the large proportion of sole traders who operate in cash-intensive areas. As regards voluntary organization, as I've already said, these have been established as a lawful non-profit making social purpose, but they can be very, very vulnerable. As regards going on to controls, I don't have much time left. These were assessed across the 5 areas of market entry: internal controls, governance, external controls, supervision, monitoring and oversight, detection, investigation and prosecution. Basically, the controls related to private limited companies were assessed to have a moderate level of effectiveness. As regards public limited companies, these were considered to have a medium-low residual risk, while partnerships were they operate with low control effectiveness and they have a residual risk of medium-high. As regards foundations, they operate with a low effectiveness of controls with a high residual risk. The controls in place to mitigate the risks posed by branches of foreign entities were assessed as moderate effectiveness with medium residual risk. Other legal entities, which include registered associations, were assessed to have a low, resulting with a residual risk of medium-low. As regards effectiveness of the controls in place in respect of trusts, these were low with a resulting residual risk of high. Other legal arrangements, low levels of detection and enforcement activity, this resulted in a resulting residual risk of high. Until 2018, voluntary organizations in Malta have had limited market entry requirements and a relatively also low level of understanding of AML and CFT obligation. Thus, they had a resulting residual risk of high. Basically, the key result document of the sector-based risk assessment on the legal entities and legal arrangements, along with the respective action plan, is available for public on the NCC website, which I ask you to also access. The key results will help the competent authorities to prioritize efforts and resources, as well as to better address the private sector through appropriate outreach techniques. For the private sector, this will allow them to develop the development of proportionate and effective controls within their remit by developing their own internal risk assessments and the mode of mitigation. Basically, thank you very much for your kind attention. This is what I would like to make my concluding remark. This is basically not just an effort which the NCC has to do. All the competent authorities have to also help us with identifying the risk, but it is also a national effort. So also the private sector has to be involved and to do its own part. Thank you very much. I will now pass on the microphone to Dr. Clara Borg-Bonacci from the FIAU. Thank you.
Thank you for your presentation, Helga, for giving some local flavor to the risk exposure of trusts and company service providers in Malta. And thank you to the MFSA for organizing this excellent webinar, and of course for inviting the FIAU to share some insights with the CSPs. My name is Clara Borg-Bonacci. I manage the guidance and outreach section of the FIAU, and today I'm here with my colleague Carmela Loredana Umbro, who is a senior officer in the guidance and outreach section. So through our team in brief, we support the FIAU's efforts in raising the standards of anti-money laundering compliance by identifying weaknesses or identifying areas of change and development and addressing these through guidance, outreach, training, and other initiatives. So let's get straight to the point on this particular topic. There are 680 trustees and company service providers in Malta. Now, 680 is just under a quarter of the total subject person population in Malta for anti-money laundering purposes. Naturally, the CSPs provide services that are important, that's essential and critical to the functioning of Malta's economy and Malta's financial system. But is it necessary for them to have anti-money laundering obligations? Isn't money just the bank's remit? Of course, don't expect me to say anything other than yes, but just to give you some historical context, the very first efforts towards preventing money laundering were, of course, focused on banks and financial institutions, as these were the first port of call for criminals to launder their dirty cash, move it around, and have it ready for their day-to-day use. Of course, banking systems became compliant with their obligations, and over time they developed sophisticated systems to detect suspicious activity. And as you might be aware, it's now near impossible to develop any large sum of cash at a bank without raising some eyebrows and being asked for questions and documentations. And so this was a problem and very inconvenient for criminals, because the whole point of these complex money laundering methods was to disguise the link between the criminal and the money. So criminals very cleverly started to adapt and find other lesser or unregulated avenues to use their cash and to disguise transactions. So they moved to companies and trusts. They use real estate. They use false loan agreements. They set up cash-intensive businesses, and they found other ways to move money around. In other words, they started to seek the services of professionals to help them launder their money. And so over time, governments and international bodies started to regulate these sectors and professionals that were more vulnerable to abuse in the same way that they do for banks and financial institutions, because the exposure is the same. And this is why trustees and company service providers have a role to play in fighting money laundering, because unfortunately, as we saw, as with banking and financial services, the services that they offer for legitimate business and even personal use happen to be very attractive and useful to criminals who want to launder their dirty money. Now, TCSPs can create complex and opaque structures The structures can span across multiple countries, all for legitimate business purposes. The structures can be used as a vehicle to move funds around from country to country. And in the NCC's previous presentation, we also saw how trusts in Malta hold a very large amount of assets. But unfortunately, these services can be misused for other reasons, so to obscure ownership or to make it harder to detect. This traditionally has had beneficial private use, but it in turn helps to obscure the connection between the crime and the owner, make it difficult for law enforcement to track and detect. Now, the FIAU during the last 12 months has undertaken a lot of initiatives to improve the understanding of the different money laundering and funding of terrorism risks within each sector. Because to be able to truly mitigate the risk that you, as a professional, as a practitioner, face, you need to be aware of that risk. But of course, risks are not generic and they vary across each sector, across each industry, across each profession. They vary also depending on who your customer is, the countries that you're connecting to, the countries that your customers are connected with, and within your line of work, the different services you offer all attract different levels and types of risk. But if you're armed with good knowledge on the type of risks you're exposed to, then you're already in a better position to undertake mitigating measures that are appropriate and commensurate. So this also means that you can focus your resources, so be they time, human, or of course financial resources, on those areas that pose a higher risk of money laundering, while then being a bit more flexible but keeping a watchful eye on those areas of lower risk. And this is the essence of the risk-based approach, which is explained in quite a lot of detail in the FIAU's Implementing Procedures Part 1, which is the main legally binding guidance document for all subject persons. I may be biased, but I cannot stress this enough. This document is essential, absolutely critical, if you are a subject person regulated by the FIAU, because it contains guidance on every single anti-money laundering requirement under the Maltese sun, besides the fact that we supervise and enforce against the implementing procedures. But we also acknowledge that some sectors face unique challenges in implementing anti-money laundering obligations, and they need a bit of personal attention. So for the past year, as with other sectors, we've been working together with the Institute for Financial Services Practitioners, the IFSP, on a sector-specific guidance document for company service providers. And we're working with the IFSP as the sector representative to make sure that the document is as practical as possible and that it takes into account the local scenario. So how the CSPs are operating in Malta and the challenges that they specifically face. Now, on a different note, last year, the FIAU received 2,778 STRs. Only 49 of these came from company service providers. From trustees, we received 7. So a total out of 56 if you combine the sectors. Now, 56 out of 2,778 is quite low, admittedly, when you consider that this is from a quarter of the total subject person population. So another important goal for us through these training sessions, through our guidance documents, is to improve the ability of TCSPs to detect suspicious activity, suspicious behavior, and immediately report it to the FIAU. And I'll soon stop here, but in the meantime, we're here to give a taste of the ML FT risks that TCSPs are exposed to. In its simplest form, the exercise you undertake to understand risks is a question of sitting down and asking yourself, what if? So what if somebody had to use my services or my skills to launder their money? How would they do that? So it's all a hypothetical exercise, and then you start looking at those situations or sources that would give rise to risk within the services you offer. And those are what we call risk factors. So now I'll pass you over to my colleague Carmen for a better explanation on risk.
Thank you, Clara, and good morning, everyone. As Clara was just explained, we are now going to focus on the different money laundering and the funding of terrorism risk factors that usually trustees and company service providers encounter when providing their services. Then we will together suggest some risk mitigating measures to be applied in connection with each and every risk factors. So let's start off with the concept of risk. Why this concept is so important? From a legal point of view, the fourth AML directive introduced the concept of risk-based approach. Then this concept was implemented by the local legislation through the PMLFTR, the Prevention of Money Laundering and Funding of Terrorism regulations, which require subject persons to adopt a risk-based approach in the implementation of their AML CFT procedures. So, what does it mean? Literally, a risk-based approach means an approach based on the risk. So, subject persons in the adoption of their AML and CFT policies, procedures, measures should take into consideration the risk that they encounter when they provide their services. So, let's see the different concept of risks. First, we can see this nice equation. I call it AML FT risk equation because it gives us an idea about the risk that trustees and company service providers encounter when providing their services. First, we have a definition of level of inherent risk. So what is an inherent risk? It is basically the risk that usually subject persons are exposed to before putting in place any mitigating measures. So once the mitigating measures are in place, there is always a level of residual risk. The residual risk, unfortunately, always exists because, honestly, no matter how strong and how meticulous the procedures that subject person have in place are, there is always an element of risk. And this concept will guide us through another concept, the risk appetite. Basically, the risk appetite gives us the idea about that specific subject person and tell us the level to which he is ready to accept that specific risk. So it is very important that before deciding whether to accept a customer or whether to carry out a specific transactions, subject persons decide whether they are ready to accept that specific level of risk or otherwise. After providing a basic introduction about the different concepts of risk, now we are going to move toward a more practical approach of the risk. We can say that money laundering and funding of terrorism risks may really differ from a sector to another sector, from a subject person to another subject person, and from a business relationship to a different occasional transaction. So what is really important is to really understand the risk every subject person is exposed to and mitigate it accordingly. Here we can see the basic steps in order to carry out a risk assessment in an efficient way. We can say that the first step is to understand the risks. Once they are understood, obviously, subject persons are required to identify them and assess them. Finally, the last step, as we will see better soon, there is the mitigation of the risk that have been assessed. The assessment of the risks that subject persons business is in general exposed to takes the name of business risk assessment. And the question might be, what are the elements that we need to take into consideration in a business risk assessment? There are actually different aspects, and we can call them risk factors. Risk factors are basically those variables that either on their own or in combination with each other may increase or decrease the money laundering risk posed by a subject persons. So what are the exact risk factors that subject person should take into consideration and then include in the risk in the business risk assessment? The answer it is pretty easy, because we can find it in Regulation 5.1 of the PMLFTR, which makes reference to 4 categories of risk factors as a minimum. So we have the the customer risk factors, geographical risk factors, then products, services, transactions risk factors, and finally delivery channel risk factors. So now we are going to focus on each risk factors from a TCSP's point of view, trying so to highlight the risks connected with the different scenarios, and then Clara will suggest some mitigating measures in order to mitigate such risks. So let's start off with the customer risk factors. The first risk factors that usually TCSP can encounter when providing their services is having a customer that is a complex corporate structure. What is a corporate structure? Those structures are basically structures that involve multiple tiers of shareholding levels, or a certain degree of opaqueness, because, for example, held by bearer shares, or in a nominee or fiduciary capacity, or and which in most cases would involve different company registered in different jurisdictions. So what are the risks linked to this situation? First of all, such structure are usually opaque and very complex. So such complexity makes very difficult for the subject person to understand who is the beneficial owner and how the company is really structured. From a more practical point of view, we can say that those in order to corroborate the information gotten through from the client, subject person should require some documentation, and this process is not always easy, because not all jurisdictions are available to provide documentation, especially very reliable documentation like the ones that come from a public registry. So this is another issue related to this category of risk. In a very interesting document paper issued by the FATF, Financial Action Task Force, last year in 2019, there is a list of situations related to the risk, to such a risky situation. So basically the FATF summarized this element of risk as follows: unexplained use of shell or shell companies, front companies, legal entities with ownership through nominee shares or bearer shares, for example, control through nominee or corporate directors, legal person or legal arrangement splitting company or assets administration over different countries. All this without any apparent or legal legitimate tax, business, economic or other reason. Obviously, if there is a reason behind it, everything is fine. So when there is not a reason, subject person should be more careful. Another risk scenario that was highlighted by the FATF is the unexplained use of informal arrangements, such as family or close associates acting as nominee shareholders or directors, without, here again, any apparent legal or legitimate tax, business, economic or other reason. And finally, with specific respect to trustee, the use of trust structures with a clear purpose to obscure the ownership in order to place assets out of reach to avoid future liability. Now, Clara will suggest us some mitigating measures in case of complex structures. Over to you, Clara.
So, as Carmen explained, complex structures pose a higher risk, and these types of legal arrangements can be quite common within a TCSP context. Now, as per the regulations, there is a requirement to identify the beneficial owner when the customer is a legal person or arrangement. And if there are bearer shares anywhere within the structure, there are also specific instructions on the steps that you have to take and the documentation that you need to collect to mitigate the admittedly much higher risk associated with bearer share companies. The whole purpose of these measures that you take are that notwithstanding the complexity and the multiple layers and the multiple jurisdictions involved in the company, in the structure, you need to know exactly who you are dealing with, who you are providing your services to, and therefore who is benefiting from the services that you provide. Of course, the identification of the beneficial owner is explained in a lot of detail in the implementing procedures, and it would depend on who your customer is and the type of customer that you have. But it's also important to not adopt a checklist approach and just stop at identifying the beneficial owner. The purpose of the service that you are providing to this complex structure should make sense and should be in line with your customer's activity or business. And you should be satisfied that there is a genuine purpose for the service. And I'll explain how you can do this, how to identify the purpose of the service and make sure it's genuine later on when we speak about customer risk factors. So now Carmen will move to the next customer risk factor, which is that of high net worth individuals. So over to you, Carmen.
Thank you, Clara. Yes, next, TCSP's customer risk is represented by high net worth individuals who seek the TCSP services to set up or to administer corporate structures. So, who is high net worth individuals? Actually, a global definition does not exist, but in some countries, high net worth individuals are defined as those having investable assets superior to $1 million per year, excluding the primary residence. However, of course, the FIU does not require a subject person to classify such clients, but we just recommend that whenever a TCSP is approached by a particular wealthy customer because of the high annual income or because of the particular number of liquid assets, should put in place the required mitigation measures, as we are going to see. So what are the risks connected with this particular category of individuals? Such individuals may pose a higher risk due obviously to the different streams of wealth that they own. On the other side, it is very difficult for the TCSP to really determine the source of wealth, and there is another element, the fact that they have larger amounts of funds and assets that are ready available, and they can be put very quickly in the financial system. Finally, it is not easy for the subject person to carry out some CDD procedures, even because such category of individuals can conceal in an easy way any possible proceeds of crime. Therefore, as Clara is going to explain, mitigating measures need to be implemented accordingly.
So we don't speak a lot about high net worth individuals, and there isn't an explicit requirement to determine whether your customer is a high net worth individual. But if your business habitually targets these clients, it's good to know that they still do pose a level of risk, which you can mitigate by understanding how and why your service will be used, and by understanding where the funds that will be flowing through that service are coming from. If the risk assessment results in a higher risk, then you may want to take steps to understand how the high net worth individual accumulated their wealth. In doing this, it would be beneficial to carry out some checks on the customer to see whether there is any adverse knowledge linking them to criminal activity, such as tax evasion, drug trafficking, corruption, and so on. So Carmen, for the last customer risk factor, what about politically exposed persons?
Thank you, Clara. Yes, with respect to the political exposed persons, we should say that subject persons should, TCSP, sorry, in this case, should take into consideration a particular element. First of all, they should check the PEP's home country, because it might be that the specific PEP is from a very high-risk jurisdiction. So home country is a very important element in the carrying out of the assessment. Second element is to the prominent public function that is linked to the sector known to be exposed to higher level of corruption. This is another very important element that subject person should take into consideration, since there are particular sectors more exposed to corruption, for example, oil, gas, mining sector, or natural resources sector. And finally, subject person should always check and make sure that there is not conflict of interest in the service they are requiring with the position they occupy in the society. Clara, next to you for the mitigating measures.
Thanks, Carmen. So, of course, you need to determine whether your customer and the beneficial owner is a politically exposed person. This is a requirement within the law. It's specified what you need to do, and the enhanced due diligence measures are also specified within the law. Now, with PEPs, you need to know that there is a higher risk that the services that you are offering to them may be used to launder proceeds of crimes such as bribery or corruption, given their increased exposure to those crimes. So it's important to really understand why they are seeking that particular service. Why does the PEP need me to set up a company? It could be, of course, for completely legitimate business or personal reasons, but it could also be for other more sinister purposes. It could also be the case that the request doesn't really make sense when taking into consideration the PEP's position. Now, if the service is one that will permit the movement of funds, really understand where those funds are going to be coming from, and make sure that those funds are coming from a completely legitimate source, because the risk is higher. It would also be helpful to carry out some online checks on that person to make sure there is no adverse media linking them to criminality or to any other activity that would expose you to a higher risk. Finally, as Carmen mentioned, with PEPs, it's important to keep in mind that although they are considered to pose a higher risk, not all PEPs will give rise to the same level of risk. So the enhanced scrutiny that you carry out would be varied depending on the relationship. And this also could include the sector that the PEP operates in. So for instance, if the PEP is involved in a sector that is heavily dependent on procurement of large values and volumes, then the risk of corruption can be higher. So that was a taste of just some of the customer risks that you can be exposed to. In the interest of time, we're going to move over straight onto service risk. And these basically are those risks which TCSPs are exposed to when they provide or carry out a given product. Now, we also prepared some slides on jurisdictional risks, so the risks that you are exposed to through your geographical connections, but I'm given to understand that we are going to go into somebody else's presentation if you continue. So let's go to service risks, because we believe that with trust and company service providers, these are the critical areas that they need to understand given the services that they provide, and given that this is the most sector-specific aspect, whereas with jurisdictional risk, it tends to be quite homogeneous throughout. So generally speaking, the risk that is associated with a given service will be higher if that product or service that's being offered permits a level of opacity. So for instance, it allows the customer or the beneficial owner to remain anonymous, or at least makes it harder to trace or to identify who they are. Products like nominee or omnibus accounts, or providing fiduciary and trustee services, permit a level of opacity, though even as we'll see later on throughout the day, with ownership registries, these things are becoming a bit more transparent. Likewise, if it permits complex transactions to be carried out, so it creates a vehicle for moving money across different jurisdictions and involving multiple parties. So in this context, you can think of a company or a structure with multiple entities and arrangements, as these in themselves are a vehicle and a channel for receiving or transferring funds through a bank account. So earlier last month, we held a webinar on trade-based money laundering. And we looked at a case study where 3 or 4 separate companies were transacting large volumes of funds with each other, and the transactions were substantiated or justified by invoices. When the bank dug deeper, it discovered that the Malta companies were all owned by the same beneficial owner, and the invoices were fraudulent or they were forged. And this setup was used to create layers and layers of transactions to and from foreign countries to launder proceeds of known crimes. And likewise, if it permits a high value or rapid transactions, that would also increase the service risk. Now, to mitigate the risk, we emphasize on the importance of assessing the purpose and the intended nature of the business relationship. So you really need to build a good profile, because this would put you in a better place to detect suspicious activity as you go along. You need to understand the rationale for setting up the company, or for establishing the trust. Is there a legitimate business rationale? This is a particularly relevant question. What activity or service will be carried out through those entities? Does the profile of the shareholder or beneficiaries or settlor tally with the prospective purpose of that arrangement? Information on the source of funds or the assets forming the capital or the wealth that is going to be placed into trust, and so on. And these will also be explained in a lot more detail in the implementing procedure specifically for CSPs. And now, finally, Carmen will take us to the last risk factor, which is the interface risk, or what we sometimes refer to as delivery channel risk.
Thank you, Clara. Yes, this is the last category of risk factor, delivery channel risk. The delivery channel or interface risk is the risk that arises from how the subject person interacts with the customer and the channel it uses to provide a given product or service. When the customer is interacting on a non-face-to-face basis, there is, of course, an increase of risk. Why? Because the subject person doesn't meet in person the client. So in this scenario, it might be some problem related to identification, but this risk can be duly mitigated, as you can see in the implementing procedures part 1, where it is very well explained the procedure to mitigate identification risk on a non-face-to-face basis. Finally, we have to say that the increase of the risk is linked to the fact that the customer may be hiding behind another person who would be acting as a front in order to obscure the identity of the real customer. So it is very important that trustees and company service providers obtains instruction in relation to put in place the duly mitigating measure in order to decrease the risk. Finally, another very common situation that for sure trustees and company service providers may encounter when providing their service, it's linked to the intermediaries. Intermediaries is just the person that introduces the customer to the CSP and remains involved in the business relationship between the client and the CSPs. For example, by giving instruction to the CSPs on the operation of the customer, or just by coordinating work for the customer. Clara, over to you for the mitigating measures.
Thank you, Carmen. So just because you're not meeting your customer on a face-to-face basis doesn't mean that there is a suspicion of money laundering, but you need to understand if this makes sense. I mean, it could be a global pandemic, it could possibly be an attempt at concealment, but what really matters here is that you take steps to identify and verify the customer so that you know who you are dealing with and that the person really is who they purport to be. And since you are not in a position to view original documentation, then you need to make sure that you verify the authenticity or take steps to ensure that the documents being provided are authentic. So that was a taste of some of the risk factors that are relevant for trustees and company service providers. Remember that the presence of a risk factor is not a money laundering suspicion. And later today, we're also going to see some red flags that are an indicator of money laundering suspicion. But just because your customer is linked to a high-risk jurisdiction or if their assets are held in a trust outside of Malta, it doesn't mean that they're laundering money. But it does mean that there is a higher potential for this. So the risk-based approach is then an acknowledgement that resources are limited and that these need to be assigned then in higher measure to areas of higher risk so that you can carry out proportionate monitoring. So if I may quote the FATF, the risk-based approach is not a zero failure approach. You can take any reasonable and proportionate measures, but there is still a possibility that something will slip through the net. But it does permit you to prioritize your resources. So together with banks, lawyers, notaries, casinos, etc., trustees and company service providers have a critical role to play now more than ever in actively fighting money laundering. And it starts with knowing how you can be used to launder money and taking steps to prevent that from happening. So thank you to Carmen, thank you to the MFSA, and thank you for your time. I'll now pass you over to Petra and Alison.
Good morning, my name is Alison Cortez. I'm coming from the Conduct Supervision function of the MFSA, the function that takes care of the supervision of trustees and company service providers. Today, together with my colleague Petra Camiller, we will be going through some examples of what the MFSA expects from subject persons and license holders with respect to the risks associated with the provision of services to trustees and company service providers. I guess there is no need to reiterate that the area is risky, that trustees and CSP operates into, and in fact, risks can be deemed as being part of everyday life, but the issue here is whether we have control over these risks. As my colleagues from the FIU have pointed out, the level of STRs compared to the population is very low. Unfortunately, this does not reflect the reality because, as various studies have shown, trustees and CSPs do work in a high-risk area, and the financial crime risk are further augmented in this area. The good news for trustees and CSPs is that with proper mitigation of these risks, they can be controlled. This webinar the target audience of this webinar is the trustees and company services providers. However, as MFSA, we believe that all subject persons and license holders should have a look at these areas and listen to this webinar, because one time or another they have provided services to such trustees and CSPs, and if not directly, they have come across trusts in their day-to-day business. So what can be done? Unfortunately, there is no magic formula. However, trustees and CSPs, if they manage their risks properly, which is crucial for their livelihood and their day-to-day progression, basically, this is crucial for them. One of the things that we need to take into account is reputation, because in this sector, it is crucial that the reputation of both the trustees and the CSPs and the jurisdiction should be preserved at all times. So for the purposes of those in the audience who are not familiar with the concepts of trustees and CSPs, we have a diagram which explains briefly the parties to the trust relationship. Here, there is no need to go into the nitty-gritty of each party, but we wanted to say that the settler is the person who settles the trust and provides the funds. They are the beneficiaries, who are the ultimate persons who will benefit from this trust fund. There's the protector, who has an oversight role, and finally the trustee. And this is where the people in our audience basically come in. They are entrusted with managing the trust fund for the benefit of beneficiaries in terms with the trust deed. So a brief overview of company service providers. We're not going to go into the third AML directives and the definition, but what's important here is to identify the three main services that company services providers can offer, which are regulated. These are the formation of companies, arranging or acting as director or company secretary, and the provision of registered office. So we wanted to have a look at the role of trustees and CSPs in the financial market. CSPs are key to the wider financial market. They can be used wittingly or unwittingly by criminals or people with ill intentions to establish vehicles in Malta, and also to process transactions of funds and assets emanating from financial crime. This is both for the trustees and the CSP sector that they can be used in this manner. Notwithstanding the similarities in the two areas, trustees have an additional risk because they can be used to hide beneficial owners. And this is one of the methods used by these people that want to hide their identity. In this slide, the last point is that the CSPs are the gatekeepers of the financial system. We can never emphasize enough this point. The CSPs are the first point of entry. They are the first line of defense of the jurisdictions, and when they are approached by these not necessarily ill, but by clients, prospective clients, they are the ones who are uniquely placed to observe the behavior of clients. They need to inquire about backgrounds and the business activities. And this role should not be taken lightly at all times. CSPs play this vital role in our jurisdictions, and they are the ones who needs to do the first work in relation to the safeguard of the jurisdiction's reputation. So there are various documents and studies which have been issued both at national risk at national level, including the national risk assessments. The purpose of this slide is not to go through the results of the national risk assessment, because Dr. Helga has already gone through these through her presentation. But what we wanted to emphasize here is the high risk of the sector. The sector is high risk, there are no doubts about it. All the studies indicate that. And what we wanted also to point out is that there are the national risk assessment at national level, and there is also the sectorial, which is particularly relevant to trustees and company service providers. So, what do you do with these sectorial risk assessments? We don't expect you to just print them and read them, because it's very easy for everyone to print out such a document and read it. But we expect license holders to have a look at what is being said in these assessments, conduct a gap analysis, and be familiar. But we don't expect the MLRO only to do this exercise. We expect that each and every employee or person, especially those onboarding clients, to be familiar with what is being said in these assessments. And we also mentioned the gap analysis. What is the gap analysis that is expected? We expect a simple exercise. We don't expect license holders to go on this big exercise on doing their own assessment, but having a piece of paper and say, this is what the risk assessment is saying that is risky from my area. Where are my weak points? And from those weak points, you derive the relevant mitigating factors. Unless that gap analysis is done, there's no point in having the National Risk Assessment available. So this is something that you need to do at company level. So now we're going to turn a bit on the MFSA work. The MFSA has ingrained financial crime in its supervision. With respect to trustees and company services providers, it has always been the case. I remember when I joined MFSA over 10 years ago, due diligence was always part of the checks with respect to our supervision. However, the MFSA felt that in order to strengthen its supervision and governance in the area of financial crime, in February 2019, the Mfsa Aml Cft Strategy was published. The publication has the aim of setting basic principles and to indicate to the industry what are the expectations. The strategy sets out the minimum, and I would like to emphasize on the word minimum. The standards a license holder should adopt should not be the minimum. It is very easy for everyone to have a look at the implementing procedures, what the MFSA strategy says, and just put the minimum. That is not adequate because each and every trustee and company service provider has his or her own risk. And other factors that you need to take into account. We wanted to go briefly on the principles outlined with the MFSA, and I also wanted to include some examples of what we come across during our supervision to trustees and company service providers. One of the basic principles is governance. How important is that there is a robust governance structure. It is vital in our opinion, and also that this governance structure should have a strong compliance culture. The board needs to understand the importance of having a compliance culture, and then this needs to fall down up to the lowest employees and people dealing with customers. The governance structure should be based on the 3 lines of defense, and the safeguards in place should be commiserated with the risks of each company. What we're saying here is that things like conflicts of interests should not be ignored. In Malta, we have a bit of difficulty. Everyone knows everyone. We're a small country, so potential conflicts of interest can be clear. The Trusts and Trustees Act specifically says that conflicts of interest should be avoided and not managed. We understand that sometimes it is very difficult to avoid them altogether. So you need to have in place strong mitigating factors. So the next principle is understanding of risks. And here my colleagues at the FIU have already touched upon the business risk assessment, which should be very comprehensive in our opinion, because how can you understand risk if you don't do a proper study of the risks you are encountering? We believe that the BRA is the first step. Without a proper BRA, you cannot have a proper risk appetite and risk policy. The board of directors is expected to have a risk appetite, and this risk appetite needs to be communicated across the board. And from this risk appetite, the risk policy should come into place, and eventually the risk procedures. There is no point in doing all this study and all these assessments without having procedures in place. Another point we wanted to add about the BRA is that this should be endorsed by the board and these policies. it's very important, especially we sometimes encounter, like with small outfits, that yes, the board is dealing with everything, but the board needs to communicate to everyone and endorse. We need to see a level of discussion with respect to risk, not just saying, yes, this is a risky area. That's not sufficient. There needs to be the study, and the board is the body that decides what risks to accept. And also, the BRA is a live document. We don't want to see a business risk assessment, which is like 5-7 years old. What was relevant 7 years ago is not relevant today. Somebody once told me that criminals do not have much to do other than to invent ways on getting around what the regulator would like to see. So what we're saying is that in 7 years, there will be lots of creative criminals trying to find ways to get across and around what the regulators want. And we can never stress the importance of having adequate policies in place. Even if you have an outfit of 3-4 people, you have to think of business continuity. What if someone is away on holiday? Example, I mean, sometimes I ask this during our supervision to a managing director, and they tell you, yes, I have contact everywhere. But what if you are on a plane? I mean, going to Australia, 12 hours plane. I mean, do you still have access? I mean, business continuity needs to be taken into account. Trustees and CSPs cannot have situations where there is the dominant director and this person who does everything. So they need to have all these in place. Another principle is the customer risk assessment. I'm not going to go into the customer risk assessment and the customer due diligence that is required, but what I wanted to add here is that you need to be inquisitive. It is not acceptable to find basically the employment of a beneficial owner as consultancy services. What are consultancy services? In which area are we talking about? I mean, if we have someone who's consulting in an area and then proposing a different setup, that should be flagged up. And what we're saying is that you, as trustees and company services providers, need to be inquisitive, and you need to ask over and over again. I mean, source of funds and source of wealth. My colleague will go through these later on. I mean, from business for home business. I mean, what does that mean? I mean, you should not stop at these. You have to dig deeper, as deep as you can. And also, the client risk assessment and due diligence, they have to be given their importance because they determine the client onboarding. And when you are onboarding clients, your risk is moving, either increasing or decreasing. It depends on the risk of the client. So it is something that needs to be taken very seriously. I need to make a general comment here about BRAs, CRAs, and procedures. Sometimes license holders just download these off the internet. And why am I smiling? Because we do realize they are taken off the internet. And even though the authority will not be happy with just downloading these documents from the internet, you have to understand that you are not making any favors to yourselves, because if these documents are not tailor-made to your exigencies, they are in fact worthless, because they will not help you in mitigating risks. They will not help you in putting measures in place to identify transactions or UBOs that are not adequate. The authority is not happy with, let's say, a 50 page document which is taken off the internet and is just there so that when we ask you for it, it is made available. You need to understand that this is your document and you have to make it your own. Unless you make it your own, it will not serve any purposes. And this is what we would like to see more, that you make these your own. Having a 10-page BRA, CRA, or a policy document which is adequate, tailor-made to your needs is better, and we will be happier than giving us a 50 or 100-pager which mentions another jurisdiction, so mentions another company's name. So we came across all these. So I mean, some license holder don't even try to disguise that they've taken it off the internet. So this is something that we don't want to see. And the next two principles are the ongoing monitoring, obviously robust transaction monitoring, and alertness to client behavior and activities. These are essential because the setting up of a client relationship is not only at when you are onboarding a client. Things change. You can have a client who provides you with all the documentation, everything is top notch, and then they change the behavior after a year. You need to be alert and on top of things to identify these changes immediately if you would like to preserve your business. And finally, communication, training, and awareness. Front-end people, especially those who are accepting clients, they need to understand the onboarding, your procedures, the risks, and also they need to be aware of the requirements. I have a few examples here, like how can an MLRO determine whether adequate due diligence checks are being done? And here we are not referring to the due diligence checks, the basics, as per the PML-FTR. We're talking about the internal procedures. If you have done if your internal procedures request that certain high clients emanating from high-risk jurisdictions, you should obtain different documentation in terms of due diligence, how can the MLRO determine that if the policies, if it's not communicated, training, and there is no awareness? So awareness is not simply with the legislative requirements, but also with the companies. And we come across a lot of these examples where the procedures of the licensed entity say one thing, but the minimum, which is in compliance with PML-FTR, is being done. And we wonder, like, where are the checks and balances? And how is the board effectively monitoring what is being done? Because obviously, if it's not being done, we are picking up that it's not being done. I mean, the board is not doing anything to see this. Another example I wanted to give you is about the Pep status. It's very nice to have a procedure in place where if there is a Pep, which we would like to onboard, it has to be, let's say, one of the mitigating factors has to be raised to the board. However, what we're saying is everyone trained adequately to understand what is a Pep? I mean, Pep, we're not saying the obvious Pep. There are the clients, the business partners. So we need to extend that as well. In my last slide, I will be going into some key risk factors which we come across from our supervision. We're international business, high-risk jurisdiction, non-face-to-face. The use of intermediaries, sometimes we don't give this the importance it merits, because even though license holders treat this as non-face-to-face business, we expect that license holders have a relationship with the clients, not only with the intermediaries, because the intermediary is a buffer, and you might not meet face-to-face your clients at onboarding. You might get an intermediary to help you obtain the documentation, the introduction, but eventually we expect that you have a relationship with the clients. PAP, there is nothing to add there, and high net worth clients. In conclusion, what I wanted to say is that CSPs are not prohibited from accepting clients that match these risk factors. However, you are expected to be aware of the high nature of the risk and have in place robust mitigating factors and effective controls. Because unless you have this, you're asking for trouble, basically. That's it from my end. Whilst I thank you for your attention, I now would like to invite my colleague Petra to continue the presentation.
Thank you, Alison, for the first part of our presentation. In this second part, I will be taking you through some of the red flags which CSPs should be on the alert for, and which we have in fact come across even during the course of our work. Here, what I wish to highlight is that these red flags should be red flags not only for trustees and CSPs, but also for other subject persons, as we have been mentioning, because from time to time, other subject persons will come into contact with these structures, and it is important that you are aware of these risks as well. Alison and I have had our fair share of exposure to a variety of structures, particularly through our work in supervision and especially during the course of on-site inspections. In fact, I am sure that some of the viewers today might be getting some flashbacks of our visits to their offices, which might not be totally rosy. However, we do have the advantage of having a bird's eye view, because we tend to see so many different structures and we tend to also come across these different red flags. And ultimately, our role is also to raise awareness about these risks and to educate service providers to be aware of these risks as well. But at the end of the day, what are red flags? Red flags are warning signs. So as we have been saying throughout the course of this webinar today, the presence of these red flags does not necessarily mean that there is money laundering taking place or that there is criminal activity. However, it is a warning sign. I tend to compare it to a red flag on a beach. So a red flag on a beach generally indicates that there's danger in the seas. There could be high waves, undercurrents, which we need to be aware of. However, possibly a professional surfer is able to ride the waves and control these dangers. However, it doesn't mean that the danger is not there, and that is why we should be aware of it and keep them in mind. So just to take you through some examples, and as also our colleagues from the FIAU have pointed out, CSPs tend to be exposed to various complex structures sometimes. And in the next slides, I will give you some examples of these, and where we will see certain structures with various layers and complex transactions going on. There could also be sometimes a mismatch between the client's experience and background and the proposed structure and activities of the client. So again, it is not always the case that this means that there is criminal activity going on. However, if you have a nurse who has been acting as a nurse for her whole life, and suddenly she is expanding into the business of importing steel, I think it raises a question. There could be also other higher risk activities which the client might be delving into. Again, you need to ask yourself, why is this client seeking to go into these high risk activities? Sometimes there could be also unclear links between the jurisdiction of residence of the client and the targeted jurisdiction for the business activity. So you need to ask yourself, why is this client who resides in the UK and has resided in the UK all his life suddenly targeting a non-EU jurisdiction with which he has never had any contact with? Again, there could be a totally reasonable explanation behind this. And however, again, you need to question why is this being undertaken? We are increasingly also seeing structures, especially trust structures, being set up with the use of nominee settlers, where we have an economic settler, basically the person who is providing the assets. However, he's not the person who is appearing on the trust instrument as the settler. He is instead appointing somebody else to act as the settler. Again, in some jurisdictions, this is quite common, and there could be sound agreements in place and a very reasonable explanation behind this. However, once again, you need to question and you need to probe further when you come across these instances. Some other red flags which we can mention, for example, is when you encounter reluctance from your clients to provide documentation, especially when it relates to documentation relating to source of wealth and source of funds. We appreciate that sometimes clients tend to have business in different jurisdictions, and different jurisdictions have different requirements. And sometimes you are faced with a situation where you are asked, but I am never asked for this document in any other jurisdiction. Why are you asking me for it? You need to explain why, and you need to explain the legal basis for it, and probably the client will comply. So it is understandable that clients will question. However, you need to understand why is the client questioning and see whether there is possibly something behind it or whether he's trying to hide something. Also, for example, we've come across instances where we find non-translated documents, so documents in a foreign language which have not been translated. As you know, this is one of the requirements emanating from the implementing procedures, that documents in a foreign language need to be translated. Again, reluctance to provide translated documents does not necessarily imply that there is something underhand going on. It could possibly be that the client is just lazy, or he wants to save money and does not want to get an interpreter, a translator to translate the documents. However, what if that is not the reason? What if the client is intentionally not intending to provide translated documents because there are some things which you would rather that you don't know about, or when we come to visit, we don't understand from the documents. So you need to question this again as well. Sometimes another red flag would be certain frequent transactions without a clear rationale between the transactions. Also, sometimes we find, for example, complex loan arrangements and circular transactions. Again, sometimes there is a very logical business explanation behind this and a commercial reason behind it. However, you need to ask yourselves whether this is really required. Is this circular transaction really required? Could it be simpler? And we will provide examples of these as well in the next slides. We have mentioned frequent transactions and frequent activity. However, no activity or one-off transactions could also be a red flag. For example, sometimes we come across instances where a client sets up a company, there is a whole business plan in place with an amount of anticipated transactions. However, once the company is set up, there is just one transaction, one large transaction, and suddenly the client disappears. And you find it difficult to engage with the client and to make contact with him. Again, this could be a red flag, which you need to look into. Something else, for example, especially when it comes to trusts, but not only, it could be also property forming part of a structure, is when there are fine arts, for example, and precious stones, etc., involved in the assets. Why could these be red flags? Because this area is traditionally a very cash-intensive sector, and that is also a red flag. For example, trading of art is something which is sometimes has been used for money laundering in view of the fact that, for example, arts would be transferred through free ports, which offer certain tax advantages, and in view of the fact that basically the goods are deemed to be always in transit. What happens is that through these free ports, for example, transfers can be anonymous. The assets themselves disappear, sometimes for years. And so, of course, there is an element of hiding the assets. There sometimes also we could find instances where auction houses are set up to clean up clean certain dirty money. So you transact money through these structures as well. Interestingly, possibly, is that money laundering is often compared to being an art and not a science. Because as Alison mentioned also in her previous presentation, we tend to see that money launderers are in fact very creative. So as long as they make the transaction look logical and rational, then they can be as creative as possible to use this transaction instead for illicit purposes. So here we have prepared a couple of case studies of structures which we have come across, in fact, sometimes through the course of our supervision. In this first case study, we see a structure where you have a company whose shares are held a small percentage by a fiduciary shareholder and the rest by another company. In turn, that company then has its shares held partly by a fiduciary shareholder and partly by another fiduciary shareholder. And ultimately behind all this structure, there is the same UBO. So we have 3 layers for one ultimate beneficial owner at the end of the day. Again, there could be a reasonable explanation for this. However, you need to delve further and ask yourself, why is this structure being introduced? Another example here, we find a bit of more of a complex structure where we have a trust, which is set up by a body corporate as a settler. And these trust assets then are used to provide shareholders loans to 2 companies. These 2 companies in turn hold, one company A holds 7 companies and company B holds another company. Company A and company B will eventually, of course, have dividends, which are ultimately go into the trust. And the loan repayments are made then to the body corporate settler. So as you can see, this is an example of a circular transaction. And you need to ask yourself again, why is this whole structure being created? There could be a very varied reason for this, certain tax planning. However, you need to make sure that this tax planning is in fact allowed and being carried out for lawful purposes. Here we have an even more complex case study where we have 3 trusts basically being set up by the same settler, and he's also the beneficiary of these 3 trusts. These 3 trusts are administered by 3 different trustees, sometimes even in different jurisdictions. And then each trust holds 3 companies, and each of these companies in turn hold further shares in another company, with 50% of the rest of the shareholding being held in a separate structure, which is not even featuring in the slide. So as you can see, once again, we have a very complex structure with multiple vehicles and service provider, and at the end of the day, always leading to the same ultimate beneficial owner. We have come across instances, in fact, also where, for example, where we are carrying out an on-site inspection at Trustee X, for example, if I have to use this example, and Trustee X is just looking at his own trust, where basically he's looking at his structure and he's looking at the risk of his own structure. So there he just sees Trust A, and he has 1 settler, 1 UBO for the same trust. So for him, it is a relatively simple trust. The UBO is possibly also residing in the EU. So to Trustee X, this is a low risk structure. However, if then you had to look at the bigger picture, if you had to zoom out possibly, and you had to look at this bigger picture, you will note that obviously there is a much more complex structure behind it. And Trustee X, therefore, should not just stop at Trust A, but he needs to understand why the rest of the structure is being put in place. Case study 4, We have one company again here where we note a Maltese company, for example, where its shares are being held 50% by a fiduciary shareholder. The director of this fiduciary shareholder is DEF Malta Limited itself. And the rest of the 50% shares are being held by a company XYZ in Luxembourg, for example. The Luxembourg company then, in turn, its shares are held in 75% by another company in the BVI, whereas the rest are held by the UBO, and who is ultimately also the same UBO for the whole structure. Once again, we see a complex and opaque structure with companies and structures being set up in different jurisdictions, and at the end of the day indicating that the idea is just to shield the identity of the beneficial owner. So, after giving these examples, at the end of the day, what do we expect? So when Alison and I conduct our on-site inspections and we start asking our 101 questions, what are we after at the end of the day? So what we would like to see is that if our trustees and CSPs, our license holders, have robust governance structures in place. These should reflect the size of the business and level of risks taken. In fact, for example, as an example, we always state we don't expect a small trustee or company service provider to have the same governance structure as that of a financial institution, as that of a bank. It should reflect the size of the business and the level of risks which it is undertaking. However, the structure in place should nonetheless be a robust one. We also expect to find a knowledgeable and competent MLRO who is not reliant on the compliance officer or other staff members within the company, within the service provider. It is not acceptable for us to have interviews with the MLRO and asking them, for example, how do you carry out transaction monitoring? And the response is, ask the compliance officer. That is not acceptable. The MLRO should be knowledgeable and competent in this area, of course. Having said that, of course, the compliance function must be effective nonetheless. There should be comprehensive policies and procedures in place aimed at identifying risks in a timely manner and in order to be able to mitigate these risks. You should also have sound ongoing monitoring systems in place to be able to detect these risks and these red flags, which we have mentioned. What we expect is also an in-depth probing of the client and purpose of the structure. I cannot stress this enough. You need to look at the bigger picture. Just as I have mentioned in that case study, you cannot just look at the structure you are setting up. You need to understand the reason behind it, and you need to understand the whole structure being set up. We don't find it to be acceptable that when we ask you, okay, we're seeing this complex structure. As I have mentioned, we start off from the premise that there is not necessarily an indication of illicit activity going on. However, you need to be confident that there isn't any illicit activity going on, and you need to be confident of the reason why this structure is being set up. So when we request clarifications, Alison's approach and mine has always been convince me that you are convinced of the structure. So having a response where we're told, I will ask the client's advisor, is not acceptable. You should know the structure, you should know the reason yourself. Or an even more classic answer is because the client wanted so. You need to know why the client wanted so. So you need to delve deeper. You really need to know what the reason for the setup is. And you should not be getting this information when we are at the on-site inspection. You should not be emailing the advisor 5 years down the line from taking on the client. You should have this on record immediately, and you should be confident of the structure. You need to obtain legal advice and tax advice, especially for complex structures. Again, another example here would be usually, did you obtain legal advice? Yes, my client's legal advisor said so. Okay, your client's legal advisor will obviously be advising his client, but you need to be sure that the structure you are setting up is in fact a legal one and an acceptable one for our jurisdiction. In addition to that, we also look into adequate record keeping. Here we look at obviously record keeping relating to due diligence, for example. There should be clear records relating to the rationale for the purpose of structure and transactions. There should be also a clear record of the decisions relating to client companies and trusts, and also a record of the rationale for any restructuring which is going to take place, including any legal advice. In this respect, I wish to draw your attention as well to the circular issued by the MFSA just in July 2020, in fact, in relation to record-keeping expectations of our firms. Here we have pointed out how important it is that even when we conduct our supervision, we find adequate record-keeping in place in order for us to be able to carry out our supervision effectively. So, specifically in relation to trust, for example, what we would also expect is that the trustee has a clear knowledge of assets and value under trust at all times, including underlying companies. You need to be aware of the value of assets which you hold. It is not acceptable that you are going to conduct valuations when we are on site. You need to be aware of the value of your assets held under trust at all times. The trustee also needs to have control over trust assets. As you know, one of the most important principles in trust is that the settlor divests himself of control over the trust assets. So if there is a lot of interference by the settler, that should be another red flag, and we expect trustees to have control over the trust assets and to have mitigating factors in place to ensure that this does not occur. Also, the trustee needs to have a clear understanding of the trust deed and its clauses. So if the trust deed, for example, sets out that prior to making a distribution upon receipt of a request by a beneficiary, the trustee should request backing documentation, we should find backing documentation for each and every distribution made. And when we request this information, we should not get a response that, oh, I forgot to request it. Similarly, also, the trustee would need to have a clear understanding of the relationship of the beneficiaries to the trust. So there needs to be a clear indication and connection between the beneficiaries and the settler who has set up the trust. With respect to CSPs, for example, then with respect to directorships, we expect the CSP to have a very good understanding of the business model of the structure being created and of the company being incorporated. And the directors, the CSP acting as director, also needs to have a clear understanding of the transactions being undertaken by the company. So they should not be merely acting upon instructions of the UBO. They should have a clear understanding as to why these transactions are taking place. When it comes to arranging for directorship and company secretary services, here we expect the CSP to have monitoring obligations and to always oversee the person who is actually acting as director on the company. With respect to registered office, for example, it is important that the CSP does not view himself as simply being a post box. The CSP should clearly be aware of the ultimate beneficial owner behind the structure at all times, for example, and also at least have a basic idea of what is going on with this company, as ultimately there is a reputational risk at stake. With respect to PEPs, as Alison also pointed out, sometimes what we find is that there isn't always a clear understanding of the definition of a PEP, which is to include also family members, related parties, etc. And also in this respect, we also expect that the trustees and company service providers have adequate mitigating factors in place, including, but even extending beyond, enhanced due diligence in relation to PEPs. Finally, a very important expectation which we have is transparency. When we refer to transparency, we expect that subject persons, trustees and CSPs, but also other subject persons who may engage with these structures, should be transparent both with the MFSA and the FIAU in case of any doubts or suspicions which we may have. As as has been pointed out by the FIAU, unfortunately, the level of STRs filed by trustees and CSPs is deemed to be very low. And this is of concern to us, of course, because as authorities, we have the responsibility to keep the bad apples out of our jurisdiction, so to speak. We have to keep our financial system clean as much as possible. However, as gatekeepers, you need to help us in this respect, because you are the first port of call. So as gatekeepers, you need to help us by acting as indeed the first line of defense. First of all, by keeping the bad apples out as much as possible. However, if in some way or another, unfortunately, they do manage to make their way in, you have ongoing obligations to make sure that if you suddenly have a suspicion that that something illicit may be going on, you need to point this out. And here, what I wish to emphasize is that, for example, a suspicious transaction report is just that. It has to be a suspicion. As subject persons, you are not expected to be making judgment or to prosecute yourselves. That is not your role. However, if you have a suspicion, you need to bring it to the relevant authorities' attention. As we said, we hope that obviously through these awareness sessions, you are made more aware of these risks. And in fact, your high attendance for this webinar is encouraging to us, because it shows that there is possibly an understanding that there may be a lack of awareness in this area. And that is why we hope that through these sessions, you are more cognizant of these risks and of the red flags, which you have to be alert for them. And obviously, as we said, I reiterate what my colleagues have said before me, the presence of these risks, the presence of these red flags does not unequivocally point to money laundering. However, you need to be always on the alert for them to be able to spot them and to bring to the attention of the relevant authorities. Thank you for your attention. I will conclude here, and I will now pass on our microphone to Romina from our communications department. Thank you.
Thank you, Pesa and Alison, for your interesting presentation about the MFSA's expectations, and thank you to the other speakers who preceded them. As I mentioned this morning, we will now be taking a short break. Please tune in by 11:15. If you have any questions for the speakers you have listened to this morning but haven't sent them yet, please do so now. See you in about 15 minutes time. Welcome back for the second half of the webinar. And as mentioned earlier, we will be first addressing some of the many questions that we were pleased to receive. I therefore hand over to our previous speakers to start answering your questions.
We received a question regarding the updating of the National Risk Assessment and when will this happen. At the moment, the NCC is coordinating a national effort for new statistics and new data to be collected and collated from the competent authorities. Basically, we are envisaging that by the end of this year, we will have a new updated NRA. Once it is updated, basically, we will be publishing the results on our website and making it public as well, and also available to the competent authorities for them to use and to make the proper outreaches. I will pass on now the microphone to Dr. Bojbonaji.
Thank you, Helga. So I'm going to read out one of the questions that we received. Could you comment about the ability of CSPs to take on clients who may have been the subject of a conviction over 10 years ago and since then have had a clear record? Can a CSP take on a client perhaps with adequate enhanced monitoring? So the issue of adverse media is a very good question and it merits some explanation. So what you need to assess ultimately and in a nutshell before deciding to onboard the client is the possibility that that customer or potentially their family members are still in touch with dirty funds and that your services then end up processing those dirty funds. So firstly, understand what the conviction is. That is the most important thing. If the crime is related to an activity that generates proceeds, such as drug trafficking or smuggling or serious theft, or if it's one that relates to fraud or forgery of documents, then you're also at risk there because you're dealing with somebody who cannot be trusted to provide certain documents at a reliable and reassuring extent. And the value of the proceeds from the crime itself is important. So it's a combination of value, but also the passage of time. Was it a petty amount 10, 15 years ago? In fact, you mentioned that the conviction is over 10 years ago. The more recent something is, and combined with the value, the more likely it is that they or their families, because don't forget, people will utilize family members to hide their proceeds and avoid them getting detected and confiscated by the authorities, the more likely that they are still in contact with those funds. So, in a nutshell, assess the circumstances surrounding the person. Yes, the situation does merit some enhanced scrutiny when deciding whether to onboard, and we cannot give a clear-cut answer because there are a lot of circumstances that would surround everything, so you need to look at it on a case-by-case basis. But if after you take reasonable and proportionate measures, you're still not convinced that the person is not you're still not convinced that the person is no longer in touch with these dirty funds, then you need to consider whether there is a suspicion of potential money laundering and consider your obligation to file an STR. If you're reassured that the person does not pose a particularly heightened risk of money laundering or funding of terrorism because you've assessed the situation, then you may still decide to onboard and keep a watchful eye. And the second question is, so from those STRs that were reported to the FIAU, how many were reported by subject persons, so by other entities such as banks or FIs that involved CSPs? So I don't have that type of statistic on hand, but this is still a good question and an opportunity to remind you that if you detect suspicion or have knowledge of money laundering, funding of terrorism or proceeds of crime, you need to report to the FIAU. So it's your obligation, but also your duty to do so. And just because you didn't report, it doesn't mean that another subject person that is involved in the same transaction or having a relationship with the same client or prospective client, or even having a relationship with a counterparty to a transaction, will not report. And when they do report, the FIAU will make its analysis, it will collect information from different sources and different countries, and it will open up its web, and it will also assess whether other subject persons were involved, and whether as well they should have reported based, of course, on the information and the visibility that they would have had, because not all subject persons will have the same visibility of information and facts within the same relationship. But just to give you a final statistic for your knowledge, from those STRs which did involve a company in 2019, 70% of those companies were Malta registered companies. So we also continue to remind you of your obligation to report suspicious transactions. If you have any other question, you can send us an email on queries@fiumalta.org, and I'll pass you over to Alison from the MFSA. Thank you.
Thank you, Clara. One of the questions we have received from our audience is as to whether employees of the CSPs in Malta are required to undergo AML training. The simple answer is yes. And I wanted to elaborate a bit about this. All employees, especially those that come into contact with clients, it is vital that they're aware of the AML obligations and, as I mentioned earlier, the requirements of the company with respect to AML. Because, as I explained, the implementing procedures and the PLM-FTR, they give you the basic and the acceptable minimum level of due diligence that needs to be undertaken. However, depending on the company, there will be additional requirements that need to be satisfied. it is good practice even to have administrators and even clerical staff to be aware of AML red flags and what needs to be done if they come across any of these red flags. What we're saying here is that we don't expect the board of directors or other senior officials to carry out all the Google searches, verify documentation. These documents and the due diligence side, in the majority of cases, is undertaken by staff. So the answer is yes. And the more awareness and knowledge there is out there, the better it is for the company to come across these red flags and flag them to the appropriate channels within the organization. I hope that was clear. Another question we had was in relation to the legal and tax advisors. And the question is whether the MFSA recommends any such advisors. First of all, the MFSA does not recommend any advisors. And the reason being that for each structure, it is unique in nature. If you have someone from a jurisdiction outside the EU or South America, you will need a different advisor, both from a tax and a legal point of view, than someone who is based in Italy, for example. So the legal and tax advice needs to be dependent on the structure. The advisors, they are professionals in their area. And you cannot have someone who's a professional tax advisor in all jurisdictions in the world. So what we suggest is that when you are faced with a complex structure that there is tax advice, you look into the jurisdiction from where the client is coming from, and also when the operations of the company or trust are going to be held. So as I said, you have to take it in the wider side of things. Earlier, my colleague Petra mentioned that the tax advice given to the client should not be relied upon by the companies. But that doesn't mean that you don't have a look at it. You have a look at it, you can have a good read of it, but then you need to make your own judgment and you have to take your own legal advice. As Petra rightly so mentioned, that advice is being given to the client, not to you as a trustee. But there is no harm in knowing and understanding where the client is coming from and on what basis they are proposing to set up this structure. I hope that was clear. Now I will pass on the mic to Mr. Joseph Farrugia from the Malta Business Registry.
Good morning to everyone. It has been almost 2 years since the Malta Business Registry, which at that time was known as the Registry of Company, has demerged from the Malta Financial Services Authority. This demerger signified a change in responsibilities. The Malta Business Registry is the gatekeeper in relation to commercial partnerships and is obliged to have mechanisms in place in order to prevent the misuse of legal persons. To this effect, various measures have been introduced, one of which is the Register of Beneficiary Owners. Since the introduction of the legislation in connection with the Beneficiary Owner Register, various amendments were announced. The amendments brought about in June of this year seek to enhance the quality of information held by the registry. The amended regulations create the necessary legal framework for more detailed and continuously updated beneficiary owner information. The registry no longer has a passive role. The new dimension created more responsibilities on the registry, which may be an extra burden on you. We must always keep in mind the risk factor. If it transpires that a company whose BO is or are deemed to be carrying out risky business, was used as a vehicle to launder money, your reputation as practitioners, our reputations as an agency, and Malta's reputation in general will suffer. As an agency, we always seek to be as close as possible to all of you. This takes the form in issuing frequent notices and procedures to be followed in every legislative change. Regular meetings with institutes and associations that represent you, who I thank for their continuous cooperation and support. Circulating notices and even emailing all the company directors who have their email address registered with us. We are aware that the penalties can be quite hefty. However, if companies make submissions on time, they will not have to shoulder the burden of administrative penalties being imposed by us or other sanctions. We are a public registry, and therefore you need to help us to have an accurate and up-to-date information on our portal. Ultimately, this is beneficial to all competent authorities, to you, present here today, your clients, and an interested third party. Having said this, the daily penalties are not to be a deterrent for companies to submit corrections, as the administrative penalties for providing incorrect information reaches €100,000. This amount may be imposed in case where the registrar is required to update the BO information in the register following the discovery of a discrepancy in such information. Manival submitted the recommendations in July 2019, some of which were related directly to the functions of the MBR. One of the major outcomes from the Manival assessment was that the register of company does not have sufficient human resources and legal gateways to adequately verify or monitor the accuracy of the beneficiary ownership's information held. This could sometimes call into the questions the accuracy of beneficiary ownership information held on the Maltese legal entities. As you have undoubtedly noted, the MBR has drastically increased the number of employees, and this year we have recruited 30 employees. The new recruits were mainly allocated to the registry unit, the legal enforcement unit, with the bulk of the new employees joining the compliance unit. The MBR also appointed an MLRO. The Malta Business Registry has also invested in intelligent technologies that have access to the data held by national and foreign authorities for the purpose of cross-checking and conducted advanced analysis. The MBR will continue to enhance this by the development of algorithms with the blockchain technology, which enable the performance on ongoing monitoring. Another outcome emerging from Manival's assessment was that Malta should ensure that the Registry of Company has adequate resources and legal powers to ensure that it holds accurate and up-to-date basic and beneficial ownership information, and it applies effective, proportionate and dissuasive sanctions, and considers whether a more robust approach to striking of delinquent companies is required. In order to address this recommendation, changes had to be made both in the BO, the regulations and Companies Act. My colleague, Dr. Geraldine Spiteri Lucas from the legal unit will go through this later on. The MBR has indeed took a robust approach in striking off companies that failed to file annual returns and annual accounts for a number of years, and also companies that were in dissolution for more than 10 years. Defunct procedures for 10,207 companies have been initiated for companies not compliant with their filings, of which 9,143 have been struck off from the register as up to date. MBR has received 490 objections not to be struck off. From these objections, 138 companies managed to submit the outstanding documents by the deadline to comply with the Companies Act, and therefore they were not struck off as defunct. 58 of these 490 objections, company also filed the beneficial ownership information as it was still missing. 1 to 5 objections were received from tax authorities, banks and creditors. Another 28 had pending court cases. A third outcome was that the Registry of Companies is not empowered in legislation to undertake on-site visits to verify the accuracy on beneficial ownership information held on companies and commercial partnerships. To this effect, we have established the compliance unit that is in charge in carrying out physical on-site inspections on company in order to verify that the BO information submitted to the registrar mirrors that held by the company itself and as per the internal transaction of the company. My colleague, Mr. Endorsed, will delve deeper on the subject later on today. In addition to this, all MBR staff were exposed to intensive AML CFT training by trained foreign professionals, which provided a detailed insight on how one can identify red flags in relation to various company structures. The training including a test which all employees passed successfully. In addition to this, Manival saw it beneficial that the beneficial owners of all legal persons, companies, foundations, associations are under the remit of one central entity, and as from 11th August, the foundations associations unit previously held by the entity Malta were transferred to MBR's remit. Following various enforcement procedures and necessary legal amendments to the legal framework relating to the Companies Act and subsequent subsidiary registration, Manival evaluation have been acted upon, and now the MBR is much more equipped to address the weaknesses pointed out in the evaluation carried out last year. Currently, we are working towards making the BO register available on the Justice platform, which will therefore mean that everyone will be able to access this information at EU level more easily. We will be issuing frequently asked questions, which will be based primarily on questions that we were asked in the past. MBR has embarked on the MBR has embarked on a project aimed at overhauling the technological framework being utilized for the registration of commercial partnerships. The new system will also be making use of blockchain technology. The proposed system is designed to handle all processes performed by MBR, resulting in a scenario where there will always be a clear, unalterable audit trail, which gives processes. The functionality will be inbuilt in design into the new system and using the distributed ledger technology. It will also have its own means to perform identity management, which will be fully functionable without the external entities to ensure that the registry have full control over identities issued into the system and that such entities are verified in an efficient manner. Customers will be able to initiate processes in the distributed ledger, and employees of the MBR will be able to manage these processes using the same ledger. The proposed system will also create a new way in which documents received by the MBR are handled. This will be based on the Hyperledger Fabric project that will guarantee that the management of documents and their relative processes can be managed in a unified manner and that all versions of documents will be logged, stored, and available to the MBR. The new system will allow for certificates issued by the MBR to be issued in electronic format so that any changes to the contents of the certificates will be reflected in a live manner in the electronic version. In order to make its service accessible to all in a user-friendly manner, the proposed system will be presented to users in the form of a web application that external parties will use to interact with the MBR. Mobile application may also be developed in order to explore the same functionality on mobile devices. The strategic objectives of MBR revolve mainly in the core values. The agency seeks to prioritize professionalism, motivations, customer care, dedication, among others. We will shortly be issuing a strategic plan which will include objectives such as ensuring that MBR staff, systems and processes are appropriately resourced and up to date, administering the relevant laws to assist stakeholders to act lawfully and hold entities to account where necessary, and finally, assisting in combating financial crime through monitoring oversight, sanctioning and enforcement where necessary, and cooperating with law enforcement and other local entities. Thank you. So I will now pass my microphone to Dr. Geraldine Spiteri-Luca. Thank you.
Thank you, Mr. Farrugia. Challenging times. Let's forget about COVID for a while. We are all aware that our industry, we're facing challenging times. Both ourselves, as authorities, we had to change the culture. We had to make the necessary amendments, as you're going to see throughout this slot. You, as practitioners, were faced also with the challenge that you had to put up with frequent legislative amendments, not just in our field, but in various fields. And at the same time, you had to advise and guide your clients. However, I feel that this challenge didn't destroy us as a country. On the contrary, we came out stronger. We have grown. Us as authorities, you as practitioners, we have all grown in our sectors. And so today, I want to focus, first of all, with our challenge we faced as an authority. Don't think that we just sit there comfortably and just imposing rules on you. We face challenges as well. So to put you in the picture about these amendments, I have this graph, which was done by FATF. After the mutual evaluations, FATF collected altogether the common challenges that were faced with jurisdictions. So this is more of a comfort to us, as this was not challenging just for Malta, but for various countries within the EU. First of all, the risk assessment. The first challenge that most countries faced, and even Malta, was a proper risk assessment. Let's all be honest, we were not aware until a few years ago about the risks involved and how legal persons can be misused for money laundering and financing of terrorism. Therefore, we had conducted, with the help of the National Coordination Committee, a risk assessment. The action plan, which came out of the risk assessment, we took it on board, and from that onwards, we had to do the legislative amendments, as we're going to see. Inadequate measures to ensure information on beneficial ownership and accurate and up-to-date. We lacked verification. We have all been used to a registry that is passive. On the contrary, now we have to undergo verification purposes and monitoring. There were inadequate mechanisms to ensure that competent authorities had timely access to the beneficial ownership information. We had enhanced our IT systems for competent authorities to have immediate access to our portal. We had also lack of effective, proportionate and dissuasive sanctions on companies. As you are going to see, we have increased the sanctions. I know that you might see them as a burden. However, this enhances our position with regards to other EU countries, with regards to other nations. Therefore, see the sanctions given to the registrar as something positive for our country to attract good business. The first amendment I'm going to tackle relates to the Companies Act Register of Beneficial Owners regulations. From now, I'm going to refer to them as, we all refer to them as the BO regulations. These regulations had two amendments. First, way back in July 2019, and the other one in June 2020. The bulk of amendments, however, took place last June 2020, and this after the FATF issued guidelines specifically on the register of beneficial owners of legal persons in order to provide guidance to the authorities to see how they can have verification purposes, which is of utmost importance in order to have a proper register of beneficial owners. The first obligation that came into place was the certified true copy of identification documents. It is now a legal obligation that with every change in details, a certified true copy of identification documents needs to be submitted. You tell me, but when exactly? Always, yes, whenever there is a change which is affected by the information in the passport, say for example, the surname, the residence, you have to provide us with a certified true copy. What type of identification document? The type of identification document needs to be a government issued one. So what is acceptable is a passport, an identification card, not simply a utility bill, for example, but a government issued identification document. And you tell me you are saying a certified true copy, but what type of certification? The certification, it's important to be by a warranted professional, such as a notary, advocate, or accountant. And you tell me, but it needs to be made locally. No, if it is made outside the EU, we would prefer to have that certified true copy to be apostilled. If it is made by a practitioner, a warranted practitioner within the EU, then we normally do our verifications ourselves. It is important also to note that the information reported on the BO forms needs to be exactly the same like that found in the identification documents. For example, if you are known, for example, as Maria, and on your legal name on the passport is Mary, you have to write the name on the passport for us to be able to verify. I know that this might be a burden on practitioners. However, we need to ensure that the proper verification is done and that we have correct and accurate information. Throughout, you're going to hear me saying that a lot. We need to have accurate information on our portal. A new obligation, the annual confirmation. Yes, you tell me another burden. Yes, however, once again, the purpose for the annual confirmation is to ensure that MBR's portal provides accurate information and up-to-date information. That's the sole purpose for the annual confirmation. The annual confirmation need to be provided within 42 days from the anniversary date of the company. That is when the annual return is due. Therefore, it is to be signed by the director or secretary. You have to ensure that accurate, current, and up-to-date beneficial ownership information is disclosed in the annual confirmation. So the sole purpose of the annual confirmation is not to include a new beneficial owner, but to change any details. For example, a change in passport. For example, a change in the surname. It is important that any changes are reported in the annual confirmation. In order to help you as practitioners, to let you know how much we appreciate your hard work as well with regards to your clients, we also put in place an automated system to monitor deadlines. So when you are linked to a company that you service and you provide us with your email address as practitioner, we will send you before the annual confirmation is due in order for you to say, yes, I need to contact the client, I need to get the signatures in place and to do the necessary preparations in order to reach the 42-day period. Another notification will be given at the end when it is expired. So from there, you might be in a bit of a trouble with your client because penalties will kick in. Therefore, it's important that you give us the email addresses in order to be linked to companies you services. An important point, the annual confirmation is not going to replace the Form BO2. I know you are all familiar, but for those who are not so familiar, the Form BO2 relates to changes in beneficial ownership information. Therefore, this annual confirmation is just there for the change in details. Whenever you have a change in beneficial ownership information, the form BO2 needs to always be used. We said, so let's implement what the FATF is saying and let's put the necessary house in order, basically. However, we have noted that some forms were not as much as user-friendly as they should have been. Therefore, we went through the forms on the beneficial ownership information and amended them when required. Where we felt that new forms were required, we also created new forms. One of them, for example, is for the reporting of the senior managing officials. When you have a change in the senior managing officials, a new form has been created for you practitioners and for companies to be able to report easily. Also, in addition to the annual confirmation, we were faced with a scenario where we have a practitioner and they tell us, no, I don't want to wait for the annual confirmation. I want to change the details of beneficial owners immediately when I'm aware of them. No problem about that. We have created a form specifically for that purpose. Such form does not carry penalties, the only form that doesn't have any penalties attached to it. However, we are doing our utmost for you to help you also to have the portal accurate and up to date. The powers of the registrar. As you are aware, the powers of the registrar has now been widened. With regards in corporations, we are rejecting companies immediately if we notice that the beneficial owners are not disclosed. Therefore, we don't even take the fee, nothing, we just return it back. So it's very important that when you are filing a new company, you file the form BO1 signed by the proposed director, and it should accompany the memorandum and articles and the other supporting documentation, together, of course, with the certified true copy of the passport of the beneficial owner. Directors. We know, yes, this is one of the biggest headaches of the industry. From now onwards, we are stopping directors from acting on new companies when they are involved in other companies which failed to file the beneficial ownership information. It is important for all directors that are involved in companies that might perhaps lose contact with the shareholder. It's important to put everything in order, as you will be stopped for sure from making additional companies. So it's important that you go through your clients, even old ones, because someday you're going to be faced with a situation where the registrar tells you, no, everything is in order with this company, but you cannot act as company director. With regards to additional documentations, we had included another, as you are aware, we used to ask for supporting documents. However, sometimes, to be honest, we felt that the industry were always opposing us from verifying documents, therefore have implemented it in the law. Now, the registrar, before process and a document before register and document relating to the beneficial owners, he now can ask for any type of supporting documentation in order to verify whether the information is correct or not. We have included also the right that, with regards on-site investigations, the right cannot be restricted, obstructed, or precluded in any manner. It is for your own good to cooperate with us, basically, even during on-site inspections. We are here to put an accurate portal. Remember, the portal is accessible by everyone, worldwide, basically. So it's important that as a jurisdiction, we see and try to see that everything is up to date. So, striking of procedure. With regards, as you are aware, we have struck off more than 10,000 companies, and these for failure to provide the annual returns or the financial statements. From there, we also now issued another sanction that the striking of procedure will also apply to those companies that failed to disclose the beneficial owners. We have initiated the process. Within few months, we'll have the first 1,000 companies struck off because they failed to file the beneficial ownership information. So within next week, we're going to start another batch, some 2,000 additional companies. So it is important that you have clients that till now they didn't submit the beneficial ownership information, to urge them to make the necessary amendments. The procedure gives time. It gives, we first send a letter, the procedure is in the law, we first send a letter informing the company directors, we send a letter to all company directors and to the registered office. So if you practitioners have a company on your office as registered office, you will also receive the notification. We'll give 1 month for the company to regularize its position. If not, if the company fails to provide correct information to the registrar, we will proceed with publishing on a daily newspaper the list of companies that failed to make the necessary submissions. If within 3 months we do not receive the information about the beneficial owner, and unless there are objections by creditors, we will proceed with striking off the company. Also, the registrar has a right, with immediate right, so to speak, that companies that become sanctioned by international organizations are just struck off the register. Administrative penalties, your biggest headache, and our biggest headache as well. We know that these are hefty penalties. However, unfortunately, the amounts we had previously were not able to deter companies from not submitting beneficial ownership information, and hence why we have ended up with these large amounts, so to speak. We have also increased to 100,000 the penalty for when the registrar would need to change the information held on his register. Another 5,000 euros is imposed when the information is misleading. So these are the penalties. We urge you, if your companies has not yet reported, to report ASAP, because the penalties as are today amounts to thousands of euros. Also, another amendment which took place, and this affects you who act as liquidators on company, basically advocates and accountants. The retention period for beneficial ownership information. When you are acting as liquidator, you are legally obliged to keep the register of beneficial owners for 10 years. Yes, but you tell us, but how I'm going to keep up to date after a company is struck off? You have to keep in mind that these amendments are in the light of the Companies Act. Therefore, for example, any share transfer would need to be authorized by the liquidator. Therefore, the liquidator will, at every point during the lifetime of that company, to report and to endorse any share transfers that take place. Various amendments also took place in the Companies Act. These were also published few days after the amendments to the BO regulations. Restrictions on proposed directors and secretaries. Restrictions were imposed for company secretaries and directors who are involved in companies that failed to provide information, that failed to incorporate, that failed to provide information, annual returns and annual accounts, financial statements for 2 consecutive years, 2 breaches in over 3 years. Therefore, the annual returns, annual accounts, annual BOs confirmation and BO forms are of utmost importance, because we are considering breaches to be of these, mainly for these information. The Civil Code. We have also seen amendments to the Civil Code. These were on 11th August 2020. Amendments to the second schedule were in order to have one central register for legal persons, both with regards to basic information, but also to beneficial owners. I want to also bring to your attention that the register of beneficial owners for those falling under the remit of the Civil Code includes also beneficial owners for non-government organizations that are registered and that are enrolled with the voluntary organization, the Commissioner for Voluntary Organization and Sports Malta. Therefore, we have a holistic register of beneficial owners. FATF's approach from all of this is that all registration of all legal persons needs to be made online. It is important to note that a well-resourced and proactive company registry benefits everyone. Us as MBR, authorities like FIU, the police, Mfsa, benefits also your clients, yourselves. So it is important to make sure that you help us have an accurate register. Timely access by competent authorities, CSPs, and the general public. Our portal is online and accessible anytime for a very minimal fee for TCSPs and the general public. The verification of identity of beneficial owners. The FATF overstresses this point that information on beneficial owners need to be verified. It is also important that reports are made with regards to pattern of activities to competent authorities as necessary. As my colleague will explain in the next presentation, we are obliged to be the first gatekeepers on a company is incorporated. For this end, MBR has engaged specific trainers, foreign trainers with regards to AML for us to be able to detect companies that may have suspicious structures and for our MLRO to do the necessary reportings when he deems fit. But is everyone aware of his or her responsibilities? We should ask this question to ourselves, all of us. The company itself has also an obligation to play and a role to play in this. The company needs to ensure that it has the record of the beneficial owners. The shareholders need to ensure that they know who are the beneficial owners when they are corporate bodies. The company registry, us, we have an obligation to make information public. We are public registry. Obliged parties, such as lawyers, notary and accountants, you, TCSPs, everyone, we are all in this together in order to make better reputation for Malta and of course a better portal with more accurate information. Each key stakeholder should take their obligations, understand the risks involved in the formation of legal persons and the ongoing carrying out of their duties actively and continuously. So you don't just help a client with incorporation, you need to make the necessary ongoing checks if your client engages you in that regard as well. The effectiveness of supervision and law enforcement are also important to make sure that the relevant parties have performed their duties. It is important to ensure that the responsibilities of various parties are clear and they have played their roles in defending the system of preventing misuse. So now I pass on my mic to Mr. Andrew Schcambri.
Thank you, Dr. Lucas, for your presentation, and good afternoon to everyone. As the title indicates, the focus of today's presentation will be on-site inspection and how such on-site inspection reduces the risk of having incorrect beneficial ownership information. We will then delve into other aspects which the Malta Business Registry has invested in which are also important to reduce the risk of having companies owned and managed by individuals owned and involved in money laundering and or funding of terrorism. So, one of the main duties of the compliance unit within the Malta Business Registry is to conduct on-site inspection. As you can see from this slide, Regulation 12 of the Companies Act Register of Beneficial Owners Regulations, which will now be referred to as BO regulations, empowers the Registrar of Companies to carry out physical on-site inspections at the premises of the company itself to verify the information submitted at the Malta Business Registry, which information has to be exactly as that submitted with the BO form. The officials from the compliance unit will also verify that the BO register is kept at that registered office in accordance with Regulation 5 as indicated in the slide. It is also important to emphasize that such BO register is to be held at the registered office of the company, and in cases where such register is not found at that address, the registrar may impose penalties because of such register not found in place. It is also important to emphasize that the compliance unit within the Malta Business Registry has decided to classify the companies with an risk-based approach. And what do we mean by risk-based approach? There are two separate variables. One is the nationality of the shareholder, and the other one is the activity of the company. The nationality of the shareholder is linked to the National Risk Assessment. That is, if country A and on the National Risk Assessment was classified as high risk, then if the nationality of the shareholder is that country A, then automatically that company is listed as high risk. The second variable will be the activity, as already mentioned, and we make a difference between a holding company, trading company, gaming company, property company, which all incur a different risk score. This will help the compliance unit in the selection of companies for an on-site inspection and also the frequency of such inspection. Once such exercise is concluded, the companies will be chosen and the letter is sent to each and every company. Such letter will include the information on the date of the visit, who will be conducting that on-site inspection, and also the reason for such inspection. Once the letters are out, the officials from the compliance unit involved in that inspection will start conducting the pre-inspection work. And what do we mean by pre-inspection work? The BO form submitted by that company will be reviewed, because let me make a note here. The BO form submitted at the first stage at the Registry of Companies is not reviewed by the officials from the compliance unit. It is reviewed by the desk officers, and thus the information in that BO form will be reviewed by the compliance officers for the first time, and thus that information has to be compared with other information already held by the Malta Business Registry, such as the memorandum and articles and all the information indicated in the memorandum or in the articles if the need be. Just to make an example, if the BO form submitted by the company indicates that no one has 25% ownership or control, and afterwards there is a submission of a fresh memorandum and articles which such memorandum included a new reserved powers for the directors, which reserved powers may include the appointment of a director which has a reserved power to appoint the majority of the directors. Such change in the memorandum and articles will automatically lead to the submission of the BO2, because that director now has control over the company, and therefore the BO2 should have been submitted. And in that case, if the BO2 has not been submitted with that memorandum and articles, it automatically leads to already into a discrepancy for that company. Also, the compliance unit officials will check whether there are any administrative penalties claimed on the BO form submitted, and if that administrative penalty is not already paid, such payment of that penalty will be dealt during the on-site inspection. Now, during the visit, the compliance unit will have a short meeting with the director, if obviously the director is available, because there are companies which have foreign directors, and in the case of foreign directors who have a service provider in Malta representing them, we can also have a meeting with that service provider so that he can explain the file, and the officials from the MBR can understand more what is in the file. It is important that on the day of the inspection, either the director or the service provider is available for questions made by the compliance unit officials. Some of the documents which the officials will be reviewing during the visit, as you can see from this slide, to verify the beneficial ownership information can be the BO register, which I already explained. It is important that we find at the registered office, shareholders resolution, and a dividend payment which further confirms the beneficial owner, agreements made by the shareholder which also further confirms that person is the shareholder of the company. That can be the director holder, but obviously with other documents we can arrive to the ultimate beneficial owner, share certificates, and passport copy, which we can confirm that the passport number indicated in the BO form is the same as found on file. And obviously if it has expired, a new passport has to be in file, and the MBR should have been notified with that new passport. Now, what happens after the compliance unit has collected all the information during the on-site inspection? Once back at the office, the officials will start compiling a report whereby all the information collected will be drafted and the findings will be included in that report. Such findings will have to be aligned with the beneficial owner regulations, and in cases where the findings are, in the cases where a discrepancy is found, the MBR officials will also allocate what has to be done by that particular company. In cases where a discrepancy found during the on-site inspection merits a penalty, the company will be informed in the report, and the statement of such penalty will also be sent. The compliance unit will consider a non-site inspection as concluded once the BO register is up to date, that is, all the requests are settled, and also once the payment of the penalty is done, if there is any penalty which has been claimed. Now, what I have just explained is the normal procedure. Now, as you all know, at the current moment, we are not living in a normal situation, and thus, as all the other competent authorities are doing, the Malta Business Registry has had to adapt to the current situation. And therefore, once we send the letter to inform the company with the on-site inspection, we are also requesting that the information is sent via email. And that information is reviewed by the compliance unit officials, and the information is taken and compiled accordingly. The other procedure which I mentioned will be the same, because it is only the stage of during the inspection which has changed due to the current situation. As my colleague, Dr. Geraldine Peter-Lucas has mentioned, the Malta Business Registry, as a gatekeeper, has an important role in the fight against money laundering and funding of terrorism, and thus the need for screening of involvements in proposed new companies. The compliance unit is responsible to screen each and every shareholder and beneficial owner involved in proposed new companies. Till today, the compliance unit has conducted KYC checks on around 3,300 shareholders and/or beneficial owners. In cases where during the screening there is a positive hit against a beneficial owner or a shareholder, all the information is passed to the MLRO of the MBR for his analysis and necessary reporting if he deems that there is a suspicion of money laundering. Apart from the screening of the shareholders and beneficial owners, the compliance unit also conducts checks on the directors of the proposed new company. In cases of directors, the exercise is twofold. This is because in conjunction with the KYC checks, which in that case the information is also reported to the MLRO if the need be, there is also checks on the database of the Malta Business Registry in order to check whether that director has any pending documents in companies where he is involved as director. With the new amendment of the Companies Act, specifically Article 142, The registrar was given the power not to register any documents in cases where a director has breached the obligations emanating from the Companies Act for 3 times in 2 consecutive years. This is very important as we had cases of new companies not being processed or taking a long time to be processed up until that particular director brings his house in order, that is, submitting all pending documents. This measure has reduced the risk of having companies on the register not submitting documents. This was also important as from an internal exercise, the Malta Business Registry noticed that there were individuals who were opening a company and once in default and penalties are being incurred, to avoid payment of annual returns, audits and eventual penalties, they were opening new companies and still operate. Till today, the compliance unit has conducted checks on 2,200 individuals which were proposed to act as directors in proposed new companies. So the last 2 slides were related to screening being made by the Malta Business Registry with respect to new company incorporations. However, it is also important that screening is also done in companies already registered. In fact, every day, the desk officers hand over to the compliance unit all forms related to changes in shareholders and also forms related to changes in directors. In cases of forms related to change in shareholders or beneficial owners, the compliance officials will conduct KYC checks on the new shareholder or beneficial owner, and also if any shareholder or beneficial owner of that company, so that that company will be screened in full. In cases of forms related to changes in directors, the compliance unit will conduct the KYC checks and also the checks and also the screening of the database of the Malta Business Registry for any pending documents. However, a distinction is made between an appointment and a resignation. In case of an appointment, the officials from the compliance unit will check whether that individual is involved in more than 10 companies or has more than 10 appointments in order to check whether that individual is in line with the Company Service Providers Act. The individual is also checked whether he has any pending documents in companies where he is involved as director. In cases where the individual is either involved in more than 10 companies or has pending documents, that form will be put on hold until that individual brings his house in order. In case of a resignation, the compliance unit will only check whether there is any pending documents in the company where he is resigning, and the form is put on hold until all documents are sent by that particular director, which documents are due till the date of his resignation. Till today, the compliance unit has reviewed around 3,800 forms, which involved checks on 7,000 different individuals. The difference in the number can be because forms can include more than one individual. The mentioned 2 processes being conducted by the compliance unit lead the Malta Business Registry to the next step, which is enforcement. As you can see from this slide, although there are other enforcement actions, I highlighted the main 4 and I will explain them one by one. As already explained in previous slides, in case where the compliance unit identifies discrepancies during an on-site inspection, the registrar may impose a penalty which can go up to 100,000 with the new amended regulations. The compliance unit has conducted an exercise whereby an amount of breaches which merit a penalty has been highlighted, and the amount of penalty was set according to the risk of the company. To give you an example, in cases where the BO register is not found on file and the company is classified as high risk, the penalty can go up to 90,000 euro. The second one is linked to the screening exercise. Explained in previous slide, when the compliance unit is conducting checks on the Malta Business Registry database, apart from the pending documents, it identifies that the director has a considerable amount of penalties. In that case, that director is referred to the legal and enforcement unit, and a final warning letter is issued. In that letter, that particular director is giving a time frame until all the penalties are settled. If such penalties are not settled, then a judicial letter will be issued. The third enforcement action is related to the active companies, which have not filed the beneficial ownership information. The legal unit has issued letters to inform the companies of such information is not submitted, and that the company will be struck off in accordance with Article 325 of the Companies Act. The fourth enforcement action is related to the inactive companies, whereby a letter was sent to each and every company which has not submitted the documents for a considerable amount of time, and that if all documents are not submitted within a stipulated time frame, that company will be struck off as defunct in accordance with Article 325 of the Companies Act. With respect to the third and fourth enforcement actions I already explained, we had objections from different third parties to not continue with the process, whereby the compliance unit chased the company to submit the documents. If documents are not submitted within the 3-month period and no valid reason is given, such process will not be halted, and the Malta Business Registry will continue with the strike of the company of the registrar as defunct. The enforcement actions just explained will help us in minimizing the risk as much as possible of having abandoned companies included in the register of companies or companies being used for illegal purposes and then left on the register without submitting any documents. As explained in previous slides, the maintenance of the register of companies is a joint effort between the legal department and also the compliance unit, due to the fact that once the legal department initiates the defunct procedure, in case where we receive an objection, it is the compliance unit that is responsible to chase the clients and to submit all the documents within the stipulated time frame. Furthermore, the compliance unit is responsible to conduct KYC checks on all the directors involved in companies which have been struck off as defunct, and to inform the money laundering reporting officer with all the information if necessary. Moreover, the Malta Business Registry has took a stand whenever there is a new appointment of director, and the compliance unit notices that he was involved in a company that was struck off as defunct. He will not be allowed to act as a director in either new company or an already registered company unless all the annual returns have been submitted up until the date of the strike off date. It is important that all the 3 functions mentioned, that is, on-site inspection, verifications, and maintenance of the register with as much as possible active companies, and to also include enforcement action, the compliance unit will communicate with other authorities, if the need be. 2 main and important scenarios where the Malta Business Registry has felt that communication is to be done with other authorities are highlighted in the presentation, with the first one being where the Malta Business Registry has noticed that a company and/or individual is conducting a licensable activity without the proper license, which in this case communication was done with the Mfsa, and the second one is where the MLRO has conducted the necessary analysis of all the information in his hands, and he thought that there is a suspicion of money laundering, and the report was done with the competent authority, which in this case would be the FIU. To conclude my presentation, I would remind all of you, especially subject persons, that whenever you identify any discrepancy in the BO register, you are requested to send an email, and this is to be done immediately whenever discrepancy is identified, to compliance.mbr@mbr.mt. This email can also be used if you have any queries in relation to compliance or to beneficial ownership information. Thanks for your attention. And now I will pass over the mic again to Dr. Geraldine Spiteri-Lucas for any comments.
Okay, thank you, Andrew. So, we're going to answer some of your queries that we've received. The first one relates, and I'm going to read it out. In the case when you have individual A holding 60% shares and individual B holding 50% voting rights, who should be listed as the BO in the forms. It is my understanding that we should report both. However, MBR website does not cater for this. So thanks for this question. It is important that we make this clear. As you have rightly pointed out, yes, both in this scenario, both natural persons need to be disclosed as beneficial owners. However, yes, it is possible that on the MBR portal you report both. I'm going to take a step further. A similar relationship is, for example, when you have shares that are in usufruct. You have the bare owner who has the ownership interest. However, at the back, there is the usufructuary that has the voting rights. In that situation as well, you need to disclose both. I know that in the past, we didn't use to cater for it. However, early 2018, we had the system in place. So yes, you have to report fully both beneficial owners in such a case, and you will also see them on the MBR portal. The other questions related to the certificate issue, the certification issue of identification documents. So just in case I wasn't clear, all passports need to be certified true copies. And the question relates who the warranted practitioners should be. Warranted professions in Malta, we accept notaries, lawyers, and we know who you are basically, and we can do the checks ourselves. However, in the case of EU nationals, we can do additional verifications ourselves. With regards third country nationals, that verification might be a bit impossible. Therefore, what we are asking is that the certification of that individual is also apostilled. It is important to note that we were receiving passports that were in a language that we don't understand, so there will be the translation. We have been receiving the apostille on the signature of the translator. It should be the apostille should be on the signature of the person verifying the passport and the identification document. Another question related to this was about whether if a practitioner feels comfortable to certify on the certified true copy of a third country practitioner, whether it is acceptable by us. Yes, it is acceptable as long as it is, of course, the original. Now I will pass on the mic to Ms. Emily Benson.
Thank you, Geraldine. Thank you, MBR, for your contribution to this webinar. I'm Emily Benson. I'm the Head of Conduct, and I also am the Head of Supervision of the Trust and Corporate Service Providers team at the MFSA. I'm very pleased that you've all participated in this webinar. Trusts and corporate service providers are not unique to Malta, but they are a service that is in demand and can be an asset to the financial services market in Malta, but only if they are well run and well regulated will they have a future. Compliance, I see as an investment in your future. It is not a burden. It is about making the business sustainable and giving it the excellent reputation that it deserves within the country and internationally. The MFSA has the future of this industry as a top priority, but we need the industry to understand the risks that it faces and to work with us to mitigate those risks. We share with you the challenge of mitigating those risks, and we work with the industry whenever we can to support you. But you have responsibility for complying with the laws and the regulations and the requirements, and it is your responsibility. We hope that you will see that you share that with us, and that you will respect the obligations you have under this regime. One area I particularly wanted to mention is that of STRs, which have been brought up previously by the other speakers, and as I think was clear, we don't see enough of these, and this obligation is on all subject persons, and it is not just about foreign nationals, it's about locals as well. So please do consider your obligations here. We want to up our game in this area. The other area I wanted to touch on was that was raised at the very beginning by by the Chief Officer of Supervision. I must give him his correct title, with regard to the reform of this sector. He mentioned that reform is in the pipeline and that it's with the government, and that reform has involved working across all the authorities in Malta. We are very keen to give you the detail, and we know that there is a lot of interest out there about the detail. We're not able to do that at the moment, but I do want to reassure you that we're very sensitive to the challenges that you will face if you have more reform in the pipeline. We will have a lot of communication out there, and we will be engaging across the sector. There's already been a lot of discussions going on, and so we hope that you will all be able to get access to all the information you need to understand what you need to do. We've not been sitting on our hands all summer. We have used the time well, and we believe that we're building something that will be as proportionate and pragmatic as we can possibly make it, whilst also delivering the high standards that is essential that we and you, for the sake of Malta, maintain. So we want you all to appreciate that we see it as an investment in your future to meet those high standards. That's all I really am able to say on this at the moment, but we will be putting material up on the website. We do produce a lot of guidance and communication for you, so I urge you to look at that regularly, and we hope there will be useful material for you. So thank you very much for your attention.
Thank you, Emily. Thank you once again to all our other speakers, and thank you for having participated at this webinar. Should you wish to have a copy of the presentations, we kindly ask you to fill in our evaluation form that will be sent to you via email. Once you fill in the evaluation form, you will be able to download today's presentations. My final thanks go to the communications and the technology team here at the MFSA, who worked behind the scenes to make this webinar happen. I thank you once again, and I wish you a good rest of the day. Thank you so much.